The committee will come to order without objection. The chair is authorized to declare a recess of the committee at any time, and members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. The hearing is for the purpose of receiving the Secretary of Treasury's annual report on the state of the international finance system. But before proceeding to that report, I will give you a report on the Hollingsworth family of Indiana. I would like to share with you some very good news that Joseph Albert Hollingsworth IV arrived this morning at 1:38 a.m., weighing in at 7 pounds, 15 ounces. Mother and baby are doing well. Husband and father is a total wreck, but congratulations to our colleague, Trey Hollingsworth. We will give him an excused absence from this morning's hearing. The chair now recognizes himself for 3 minutes for an opening statement. Again, this morning, the committee welcomes Treasury Secretary Steven Mnuchin for his testimony on the state of the international financial system. As we all know, it is a system that rests heavily upon our U.S. financial system, and that system clearly needs improvement. Fortunately, President Trump has outlined a bold, forward-looking plan to tackle the serious problems facing hard-working American families who have seen their paychecks stagnate, their savings shrink, and their dreams diminish over the last decade. The fact is, this economy isn't close to reaching its potential. Nearly 8 years after the last recession ended, Americans remain stuck in the slowest recovery in generations. Our economy grew at a measly 1.6% last year, when our historic norm is twice that. Over 300,000 manufacturing jobs have disappeared during the last 8 years. Clearly, 8 years of Obamonomics has clearly taken a toll. One place it has taken a toll is the competitiveness of our capital markets. We simply cannot afford to lose our status as the global leader for capital markets. Yet the United States has dropped to 17th in a recent world ranking of economic freedom, a historic low for our nation. This is based upon levels of business freedom, investment freedom, and financial freedom. While U.S. economic freedom has declined, the economic freedom of a number of our international competitors has actually grown. I have faith in our U.S. capital markets and the spirit of American entrepreneurs and businesses to take necessary risk and grow. But to do so, the unaccountable Washington bureaucracy must finally be held accountable. We must address the regulatory cost of doing business in the U.S. under Dodd-Frank. We must work to level the playing field for American companies to prosper, and as a result, our economy will grow healthier for all. For these reasons, the President's executive order establishing the core principles for regulating the U.S. financial system is vitally important to us all. As the report notes, for too long we have not empowered Americans to make independent financial decisions and informed choices in the marketplace, save for retirement or build individual wealth. We have not enabled American companies to be competitive with foreign firms in domestic and foreign markets. I could not agree more. Ms. Secretary, as you know, your first report issued last month closely mirrors key foundational principles and policies that are contained within the House-passed Financial Choice Act. From helping end bank bailouts, to making the destructive CFPB accountable, to tailoring regulations for our community banks and credit unions, your recommendations will clearly help craft a more sensible, less burdensome, healthier regulatory system. Please know that the actions that you and this administration are taking to ensure the competitiveness of the U.S. financial system are a welcome change and one that I fully support. Thank you for being here, and the committee looks forward to working with you. How much time? Yes. How much time? How much time do we have? 4 minutes. I now yield 4 minutes to the ranking member for an opening statement.
Thank you very much, Mr. Chairman, and welcome, Secretary Mnuchin. Mr. Mnuchin, as Secretary of the Treasury, you have a wide range of responsibilities that are of great importance to our economy and the well-being of the American people. These range from safeguarding our financial system to advancing U.S. values internationally. One bureau within the Treasury responsible for safeguarding our financial system is the Financial Crimes Enforcement Network, or FinCEN, which, as you know, collects, analyzes, and disseminates financial intelligence, in addition to suspicious activity reports, foreign bank and financial account reports, and other reports. FinCEN has numerous information sharing arrangements with foreign financial intelligence units, making the Bureau well positioned to identify and assist law enforcement in curtailing illicit activity. It is critical for the American public to learn the extent to which President Trump, his immediate family, and his associates colluded with Russia to influence the outcome of last year's election. Serious questions have been raised about their suspicious financial arrangements and involvement with Russian government officials, oligarchs, and organized crime leaders. As the Committee of Jurisdiction over Treasury and FinCEN, we too have our own share of questions. Fortunately, you as Secretary of the Treasury are well positioned to assist this committee in fulfilling its oversight responsibilities in assessing President Trump's financial entanglements with Russia. However, even though you have indicated, I think on more than one occasion, that you do take requests from members of Congress seriously, you did not respond to a May 23rd letter from me and my Democratic colleagues requesting copies of all pertinent financial records related to President Trump's financial transactions with and business ties to Russia, as well as those of his family members and associates. Now, I understand your staff finally did call yesterday afternoon while we were preparing for this hearing, but I'm looking forward to hearing directly from you about this matter today. There are also other areas where I have serious concerns. Indeed, in June, the Treasury released a report with recommendations that largely mirror Chairman Hinchland's Wrong Choice Act. You recommended gutting the Consumer Financial Protection Bureau and rolling back important Dodd-Frank reforms, including rules in place to ensure the stability of our financial system, like stress tests and living wills. These recommendations are deeply harmful and short-sighted given the progress we've made since the financial crisis. I also remain very concerned about the practices that took place at One West under your leadership, even though One West foreclosed over 36,000 families in California, and that it has been the subject of numerous investigations. This president has selected numerous One West officials, including you, to fill government posts. For example, Joseph Outing, a former One West executive, has been nominated by Trump to lead the office of the Comptroller of the Currency, which regulates the largest banks. Committee Democrats are very concerned about the potential for conflicts of interest with regard to a recent Department of Justice settlement with One West and any pending investigations into One West for wrongdoing that occurred during your tenure. So I look forward to hearing from you and what you have to share with us today, and I yield back the balance of my time.
Gentlelady yields back. The chair now recognizes the gentleman from Kentucky, Mr. Barr, chairman of our Monetary Policy and Trade Subcommittee, for 2 minutes.
Secretary Mnuchin, thank you for your service and welcome to your first hearing on the state of the international financial system. As chairman of the Monetary Policy and Trade Subcommittee, which has jurisdiction over international financial institutions, sanctions, and monetary policy, I think you're off to a great start. 2 days ago, this committee unanimously passed a bill that would empower Treasury to encourage much-needed reforms to the World Bank's International Development Association and reduce the IDA 18 level by $580 million. I thank your staff for having worked with us so effectively on this legislation. We are also looking forward to the positive impact that you can have at the Financial Stability Oversight Council. I would urge you in your capacity as lead member of Fdic to assess the extent to which unconventional monetary policy and the Fed's $4.5 trillion balance sheet continue to distort economic decisions and constrain American households and businesses from enjoying a faster and more complete recovery. As Dallas Fed President Robert Kaplan recently wrote, there is a cost to excessive accommodation in terms of limiting returns to savers, as well as creating distortions and imbalances in investing, hiring, and other business decisions. Monetary policy accommodation is not costless. Perhaps the greatest threat that we face are the threats from terrorism around the world, and I hope to continue to work with you on key proposals that would help thwart violent extremism and counteract rogue states like North Korea and Iran. Finally, I want to applaud your work in the June Treasury report and its call for much-needed regulatory relief for community financial institutions. According to a recent estimate, these reforms that you have proposed would allow firms to lend up to an additional $2 trillion into the real economy, which would create much-needed opportunities for Americans in all walks of life. Again, thank you, and I look forward to your testimony. I yield back.
Gentleman yields back. The chair now recognizes the gentlelady from Wisconsin, Ms. Moore, ranking member of the Monetary Policy and Trade Subcommittee, for 1 minute.
Thank you very much. I know I would feel a lot better, Mr. Secretary, if you support a strong, independent Consumer Financial Protection Bureau, especially given your reputation as a foreclosure king. I'm so disappointed that you and the Trump administration supported repeal of the extractive industry disclosures under Dodd-Frank 1504. And ironically, Treasury has just fined the agency for a crooked deal it did with Russia, while now Secretary of State Tillerson was its CEO. Finally, I've heard from state, USAID, and Treasury officials that Section 1502 conflict minerals provisions are working just fine. So I'm hoping that you will support 1502. I'm a very nice, sweet person. I hope to get to know you, but trust me, I'm going to fight you to the end to keep that in place. I look forward to your testimony.
Gentlelady yields back. Today we will welcome the testimony of the Honorable Stephen Mnuchin, since this is a new administration and the first time that we have had a cabinet-level official testify before our committee. I thought it would be prudent to review the committee and House rules on decorum. Members are required under the rules of the House to observe the principles of decorum and courtesy in debate set forth in Rule 17 and by related provisions in Jefferson's manual, including by speaking and acting respectfully and by refraining from the use of disorderly words or unparliamentary language, which includes impugning motives, charging falsehood, or implying a lack of intelligence. I would also add that over the last 2 years, my colleagues on the other side of the aisle have expanded upon these principles on the record to say that no administration witness should be, quote unquote, badgered. No administration witness should be subject to, quote, I got you politics. The ranking member and other Democrats on the committee have also said that no administration witness should be, quote, talked to badly. No administration witness should be interrupted. Every administration witness should be, quote, treated fairly. Every administration witness has, quote, right to be able to respond. And finally, my Democratic colleagues have opined that every administration witness should be treated with, quote, acceptable standards of dignity, propriety, courtesy, and decorum. So, Stephen Turner Mnuchin, for what purpose?
Parliamentary inquiry.
State your inquiry.
First, I would like to know if this witness will be sworn in.
It is not our custom to swear in administration witnesses, and we did not do so with the Obama administration. It is not the chair's intent.
Well, Mr. Chairman, since you took time to talk about how we should conduct ourselves today, I'd like to remind you and your colleagues how you treated Mr. Cordray, and I never heard you take time out to talk about how members should conduct themselves. So while we have not done some things in the past and you're doing it now, I'd like to make sure I understand that you do not wish to swear in this witness.
I believe in my tenure we have sworn in exactly one witness, and we have never required Obama administration officials to be sworn in. It is not my intention to swear in this witness, and it is simply my intent to profit from the minority's advice and counsel on decorum.
Thank you very much, Mr. Chairman.
Today, we welcome again the testimony of the Honorable Stephen Mnuchin. Again, this is the first time that he has appeared before our committee. Stephen Turner Mnuchin was sworn in as the 77th Secretary of Treasury on February 13th, 2017. Secretary Mnuchin was born and raised in New York City and holds a bachelor's degree from Yale University. The Secretary has several decades of both retail and investment banking experience, which he brings to the office in which he now holds. Without objection, the witness's written statement will be made part of the record. Secretary Mnuchin, welcome for your first appearance before our committee, and you are now recognized for 5 minutes to give an oral presentation of your testimony.
Thank you very much. Chairman Henserling, Ranking Member Waters, and members of the committee, I am pleased to be here today, and I look forward to discussing the important issues to the American people. I would like to begin by addressing Treasury's National Advisory Committee report. Treasury uses its leadership role in international financial institutions to help ensure that they are carrying out their core mandates effectively and efficiently. As the federal government is streamlining, Treasury is focused on keeping the international financial institutions as cost-effective as possible. We have pressed the IMF to increase its focus on the need to address global economic imbalances. This will help to improve prospects for U.S. jobs and exports while holding the IMF's administrative budget largely flat in real terms. In addition, U.S.-supported reforms to how the multilateral development banks employ their balance sheets have made it possible for us to substantially increase the assistance that they can provide to the world's poorest countries while reducing U.S. budgetary contributions. Where it makes sense, we will preserve these investments and remain a top donor and shareholder while also balancing priorities across other parts of the government. In doing so, we will continue to promote access to economic opportunities to eliminate poverty and to build shared prosperity. When the world is prosperous and stable, America reaps the benefits. I would like to now highlight our domestic reform agenda. Let me begin by congratulating the committee on its passage of the Choice Act. The administration supported House passage of this legislation, and we will work with Congress to reform the financial regulatory system. Years have passed since the financial crisis, and this has given us time to see what has worked and what has not. The administration is committed to a robust financial system with a free flow of credit that fuels the engine of American growth. This means allowing community financial institutions to lend and small businesses access to borrowing. It means giving Americans the opportunity to make independent financial decisions, such as buying a home and saving for retirement. This also means preventing taxpayer bailouts. In February, the President issued an executive order that directed the Department of Treasury to report on whether financial regulations were in line with important core financial principles. In June, Treasury released the first in a series of reports in response to this executive order. Our first report dealt with banks and credit unions. The Treasury report provides a roadmap to better align the financial system to serve consumers and businesses and to drive economic growth. While the report focused heavily on regulatory actions that can be taken by the executive branch, it also included a number of legislative recommendations to more appropriately align the laws governing depository institutions with the President's core financial principles. One of these is properly tailoring capital requirements for small, mid-sized, and regional banks that pose little or no risk to the financial system. It included that is the endorsement of a regulatory off-ramp for highly capitalized institutions. Another recommendation is structural reform to provide a mechanism to identify a single lead regulator to ensure that there is not unneeded regulatory overlap or duplicated efforts. A third is a legislative remedy to the overly complex Volcker Rule. A fourth is statutory changes to make the Consumer Financial Protection Bureau more accountable. Working together, we can implement both regulatory reforms and legislative remedies, particularly for the benefit of community banks and mid-sized institutions. Housing finance reform is also a priority of the Treasury and the administration. The current system in which GSEs remain in perpetual federal housing finance agency conservatorship is not sustainable and leaves taxpayers at risk. Our housing finance policy should be clear and should be designed to provide financing for homeowners and owners of multifamily units. Additionally, such policy should increase private sector participation and protect taxpayers. The other critical component is comprehensive tax reform. We have gone too long without addressing our tax system. Our business rate is one of the highest and most complicated in the world. It makes our businesses less competitive, and we are committed to changing that. Lowering the rate and bringing back trillions of dollars that are sitting overseas will allow business to invest in this country, spurring economic growth. Another important component of strong and robust international financial system is stopping bad actors and those who finance them. I would like to acknowledge this committee's effort to combat terrorism and illicit finance with the creation of its newest subcommittee. As our enemies change, so too must our weapons that combat them. Stopping the flow of funds is one more tool in our arsenal to disrupt their capabilities. Our Office of Terrorism and Financial Intelligence is ready to work with this committee, and I am personally looking forward to working with Chairman Pierce and Ranking Member Perlmutter on these critical issues. We have a chance to create historic opportunities for American people, and I look forward to working with you. Thank you.
Chair now yields himself 5 minutes for questions. Mr. Secretary, you're probably familiar with the Federal Reserve report of December 2016 dealing with the Volcker Rule that concluded, quote, the illiquidity of stressed bonds has increased after the Volcker Rule. You may know that the director of the IMF's Monetary and Capital Markets Department provided another critique of the Volcker Rule, saying that it can impact the ability of institutions to supply credit. We have a recent study conducted by the Bank of England saying in their stress simulation, material increase in spreads in the corporate bond market and in the extreme corporate bond market dislocation can threaten the stability of financial markets. So particularly as head of FSOC, what are your current concerns on the state of bond market liquidity in general, and what are your views on the Volcker Rule in specific?
Chairman Hensarling, thank you very much for that question. And first, let me just acknowledge, I see you have the debt clock up here today. Hopefully, I will get out of here before it goes to $20 trillion. In any event, as it relates to your question about the Volcker Rule, this is something that I do share your concerns. I think the biggest problem with the Volcker Rule is its complexity and regulatory overlap. And even if it is our intent not to have proprietary trading within banks, we need to make sure that banks understand how the regulation works. Recently, I was at a G20 meeting where we had some economists that came and talked to us, and they said that every trading desk needs a psychiatrist and a lawyer to determine how to apply the Volcker Rule. In any event, as my role of chair of FSOC, this is one of the issues that I am working on. I am pleased to report that we've already done preliminary work on it. The regulators also share these concerns, and we have it on our agenda tomorrow for the meeting, and we'll be addressing how we can deal with the regulatory overlap. Also, Mr. Chairman, as you do know, in our report on the executive order to the President, we've also made certain suggestions for legislative changes to that. Thank you.
Mr. Secretary, particularly those on this side of the aisle, we very much deplore what is happening to our community banks and credit unions. I know there are some on the other side of the aisle who have opined that there is no regulatory problem there. In your report, and frankly in your testimony today, you mentioned the term tailoring. Can you expound upon your views and what are you considering that you can do in the administration to better tailor rules to our community banks and credit unions?
Mr. Chairman, thank you for that question. And let me first say, we are very focused in making sure that community and regional banks can properly grow. Our financial system here, the top 8 banks account for approximately 50% of the assets in the American financial markets, and that's quite problematic. What we want to do is make sure that there is robust lending, particularly in community banks. I've met with many people. These are not Republicans or Democrats. These are hardworking business people, particularly in agricultural communities, particularly in small manufacturing communities, that constantly complain that the community banks are not able to lend because they are overburdened by regulatory issues. And I firmly believe that community banks know how to make loans. Let me just say they should be properly regulated, whether they're regulated by the state or the federal government. I do believe in proper regulation, but overly burdensome regulation so that community banks cannot strive is not something that is good for any of us or the American economy. So we are very focused on raising the regulatory burden, and we look forward to working with this committee on it.
Speaking of the regulatory burden perhaps on our regional banks, the Treasury report recommended raising the asset threshold for the application of enhanced prudential standards to a bank holding company, raising it from its current $50 billion threshold to an unspecified amount. It appears that changes can be accomplished without legislation. So what do you believe the threshold should be increased to, and do we have your commitment that you will implement these changes administratively?
Sure. Mr. Chairman, let me first say my understanding is that there had been bipartisan discussions on raising this limit in the previous administration. So I would hope that those conversations continue and that this is something that we could accomplish quickly. I think that it should be raised substantially, at least to 250 or 300 billion, and I would go further saying that simple, uncomplex banks, the regulators should be able to exempt above that. And again, that doesn't mean that those banks shouldn't be regulated. Those banks will be regulated. They will be regulated by the primary regulator, and they will be regulated properly.
My time has expired. I now yield 5 minutes to the ranking member.
Thank you very much, Mr. Chairman. Secretary Mnuchin, I want to make sure that we're all operating here with the same understanding. Even though you are not sworn in, do you realize you are under oath?
I do. Thank you.
Thank you very much. Are you familiar with the May 23rd letter I sent to you along with several of my Democratic colleagues on this committee?
Yes, I am.
Do you understand that this committee not only has jurisdiction but a responsibility to oversee the activities of the Financial Crimes Enforcement Network?
Yes.
Given that the Treasury maintains these types of records, and given your department's statements that the agency takes responsiveness to congressional requests very seriously and is committed to providing useful and appropriate responses to requests from congressional members, is there some reason why I did not get a response to the letter that I sent May 23rd?
So, Ranking Member Waters, first of all, let me thank you for your service to California. Being a resident of California, I appreciate everything that you've done for the community there.
I don't want to take my time up with
I
how
also
great I
have
am.
appreciated the opportunity to meet with
Reclaiming
you
my time.
several times
Reclaiming my
when
time.
we were doing our
Reclaiming my time.
The time belongs to the gentlelady from California.
Let me just say to you, thank you for your compliments about how great I am, but I don't want to waste my time on me. I want to know about the May 23rd letter. You know about it? Why did you not respond to me and my colleagues?
I was going to answer that.
Just please go straight to the answer.
Mr. Chairman, I thought when you read the rules, you acknowledged that I shouldn't be interrupted and that I would have
Reclaiming
the
my
opportunity.
time. What he failed to tell you was when you're on my time, I can reclaim it. He left that out, so I'm reclaiming my time. Please, will you respond to the question of why I did not get a response, me and my colleagues, to the May 23rd letter?
Well, I was going to tell you my response.
Just tell me.
Okay, so first of all, okay, let me just say that the Department of Treasury has cooperated extensively with the Senate Intel Committee, with the House
Reclaiming
Intel
my
Committee,
time,
with the
reclaiming my
Senate
time,
Judiciary
reclaiming
Committee.
my time,
Okay.
reclaiming
Matter of
my
fact,
time.
Mr. Secretary,
reclaiming my
the time belongs to the gentlelady from California.
Perhaps, Mr. Chairman, I don't understand the rules because I
Reclaiming
thought I
my
was allowed to
time.
answer questions.
Reclaiming my time. Would you please explain the rules and do not take that away from my time?
We will give the gentlelady adequate time. So what I read, Mr. Secretary, were statements of the ranking member and Democratic colleagues on how administration witnesses should be treated, not necessarily the way they will be treated. So the time belongs to the gentlelady from California, but I assure you majority members will allow you to answer the question when it is our time.
Okay, so what I was saying is that we have provided substantial information. We believe there's significant overlap. And matter of fact, I would say that we spoke to your Chief Oversight Counsel yesterday. We have been responsive, and we are trying to coordinate with you the response, and we've suggested that you get the information through the other committees. But I would like to emphasize we believe we've been very
Reclaiming
responsive.
my time.
And we'll continue to do so.
Thank you very much. You left a message yesterday, or someone on staff left a message.
No, we didn't leave a message. We
Reclaiming my
spoke to the
time,
Chief
reclaiming my
Oversight
time,
Counsel.
reclaiming my time. You did not respond. You left a message. Let us keep going. If a bank identifies suspicious activity related to potential money laundering or sanctions violations by the Trump Organization involving Russian persons, would such a bank have a legal obligation to report it to FinCEN?
Can you repeat your question, please?
If a bank identifies suspicious activity related to potential money laundering or sanctions violations by the Trump Organization involving Russian persons, would such a bank have a legal obligation to report it to FinCEN?
Yes, if a U.S. institution had any suspicious activity, they would be required to file a SAR, which would go to FinCEN.
Thank you. If FinCEN received reports of suspicious activity involving potential violations of money laundering or sanctions involving President Trump, his immediate family, and associates, would FinCEN immediately share it with the Justice Department, Special Counsel Mueller, or other interested law enforcement officials, or would you generally wait until you received a request from law enforcement for this type of information?
Let me just comment that I can't comment on any specific actions of FinCEN because they're confidential, but I can assure you that FinCEN would respond to any issues revolving the Trumps no different than they would respond to anybody else.
And so the question is whether or not you would, FinCEN would immediately share it with the Justice Department, Special Counsel Mueller, and other interested law enforcement officials. Or again, would you generally wait until you received a request from law enforcement for this type of information?
Again, what I would assure you is that FinCEN would respond to those situations no different than anybody else, and FinCEN and Treasury have cooperated extensively with, as I said before, the three other committees.
If it was widely reported in the press that a close advisor of the president was being investigated for money laundering using anonymous shell companies and bank accounts located in Cyprus, would your department proactively seek to obtain relevant information from foreign financial intelligence units where such activity reportedly took place, or would you wait until a specific law enforcement request came in?
Again, I'm not going to comment on hypothetical situations. FinCEN would handle these situations no different than any other situation.
Mr. Chairman, I respectfully request, pursuant to our memorandum, to ask for additional 5 minutes.
Gentlelady's granted an additional 5 minutes.
Thank you, and I'm not asking for specificity. I'm asking for generally the way you would handle these questions that I have presented to you. Let me continue. Have any Treasury Department employees expressed concerns to you, or are you aware of concern among Treasury staff about the relationship between President Trump and Russia?
No, nobody's expressed those concerns to me.
Given that you were finance chair of the Trump campaign, which is accused of soliciting illegal in-kind contributions from a foreign country, have you recused yourself from any work related to Russia or other foreign countries?
I'm not aware of those accusations that the campaign has taken those types of contributions, nor have I recused myself from anything at this moment, since I believe I have no conflicts.
Thank you. Trump's red line on investigations of his personal finances. In a recent review, President Trump made it clear that he considered any investigation by Robert Mueller into the president's personal finances a red line that shouldn't be crossed. Secretary Mnuchin, have you had any conversations with the president or any official at the White House in which it was directly stated or implied that supporting any investigation into Trump's finances would in some way be crossing a line?
I'm sorry, can you repeat the last part? I heard the first part, just the last part of it.
In a recent review, President Trump made it clear that he considered any investigation by Robert Mueller into the president's personal finances a red line that shouldn't be crossed. Secretary Mnuchin, have you had any conversations with the president or any official at the White House in which it was directly stated or implied that supporting any investigation into Trump's finances would in some way be crossing a line?
No, I've had no conversations along those lines. Quite the contrary.
As Secretary of the Treasury, you chair the Interagency Committee on Foreign Investment in the United States, known as CFIUS.
Yes, I do.
Which evaluates the sale of U.S. businesses to foreign entities to determine whether such sales undermine our national security. Given the significant pressure President Trump has exerted over government officials with key oversight responsibilities, from Sally Yates to James Comey to Robert Mueller to Jeff Sessions, how can we be sure that you, in your own oversight role, will appropriately review the sale of assets or property to foreign entities by top administration officials? This includes, for example, reviews involving the sale of assets by the White House Communications Director, Anthony Scaramucci, and the president's son-in-law and advisor, Jared Kushner. Can you assure us that you would recommend blocking such a sale in the event it indicates the foreign entity may seek to unduly influence U.S. policy, even if doing so may jeopardize your position as secretary?
Well, let me assure you, I take my position as CFIUS very seriously. I have not had anybody in any way try to influence me in that position, nor would I let them. And I would use my judgment, as I have, to take the seriousness of the CFIUS responsibility.
And as I understand it, you have such a matter under consideration relative to Mr. Scaramucci and the sale of a huge property to a Chinese interest. Is that correct?
Ranking Member Waters, I think as you're aware, all actions at CFIUS are highly confidential, and it would be inappropriate for me to comment one way or another on any potential transaction and even acknowledge whether any transaction is being reviewed in this public format.
Is it true that Mr. Scaramucci was considered for a position in the administration, but because of this questionable sale, that he could not go forward for fear of not being confirmed, but yet he's now in the administration? And does this in any way influence your decision that you have to make about that sale?
Again, I want to acknowledge that I am not making any comment about any potential decision that I may make about a confidential item, but I will say I have not been aware that he was ever considered for a position that required confirmation within the administration.
Thank you very much, and I yield back the balance of my time.
Gentlelady yields back. The chair now recognizes the gentleman from Kentucky, Mr. Barr, Chairman of the Monetary Policy and Trade Subcommittee, for 5 minutes.
Thank you, Mr. Chairman. Again, Secretary Mnuchin, welcome to our committee. Over 20 of my colleagues, and I sent you a letter last week prior to with the ongoing comprehensive economic dialogue with China, to ask you to address market access issues for U.S. financial firms, particularly lifting the equity caps that are currently in place. And as you know, U.S. banks and insurance companies face significant barriers and restrictions in China, while Chinese banks and insurance companies have little, if any, barriers in the United States. I want to thank you for your response to this letter and your commitment to, quote, continue to press for the removal of these and other restrictions that unfairly disadvantage American firms. What are the next steps that you plan to take to help lift these foreign equity caps that harm American companies operating in China?
So let me just first comment that I've had the opportunity to meet with President Trump and President Xi 2 times, once in Mar-a-Lago and the other in Hamburg. I also had the opportunity, we just finished our comprehensive economic dialogue. So first, I think, as you're aware, President Trump is very focused on having a more balanced economic relationship with China and has made it very clear that the current trade balance is unacceptable. And I think you may have seen in our press release from the Comprehensive Economic Dialogue last week that China acknowledged that it's a shared goal to fix the trade deficit. I think, as you know, the United States has a significant competitive advantage in financial services in general. It's one of the areas where we actually have a trade surplus with China, and I assure you, I think it is extremely unfair that Chinese companies, subject to security reviews, can buy 100% of any company in the United States. Yet, as you've said, our companies in China are limited to minority partners. We've seen most recently, Apple has been forced to share their iCloud business, one of the key parts of their business, with a Chinese joint venture partner. That's not fair. It doesn't make sense. And this administration is fully committed to making sure that American companies and American workers are on a level playing field.
Thank you, Mr. Secretary. And for the sake of time, I'll move on to my second question, but I appreciate your commitment and the administration's commitment to working with Congress to address that inequity in our relations with China. With respect to Iran Air and the efforts that Treasury is engaged in the implementation of the JCPOA. As you know, the Obama Treasury Department allowed U.S. banks to lend to Iran in order to finance aircraft sales, despite the fact that the associated services in the aircraft section of the JCPOA only spell out warranty, maintenance, and repair services and safety-related inspections. So the Treasury Department, as we understand it, currently authorizes U.S. banks to finance the sale of aircraft to Iran Air. Well, in a committee hearing in April, in this committee, we learned that this airline, Iran Air, flew 114 flights from Iran to Syria between the JCPOA's implementation day in January 2016 and March 30th, 2017, likely as an airlift in support of the Syrian regime's atrocities. Mr. Secretary, can you certify to us today that Iran Air has ceased all sanctionable activities, and if not, will the department redesignate this airline, an action that Treasury has admitted is allowed under the JCPOA?
So thank you very much for your question on that. First, let me say specifically on Iran Air, in this public format, I don't want to comment on them specifically. We do have intelligence information that I would be prepared to share with you in a private setting. But what I would say is that OFAC is responsible for granting licenses for aircrafts, as you've mentioned. Both the Boeing sale as well as the Airbus sales will require additional OFAC licenses. and that is an issue that is under review and is part of the national security review of the JCPOA.
Finally, Mr. Secretary, I asked your predecessor if he thought that regulations, particularly Volcker risk retention and the layers of capital and liquidity requirements, could contribute to illiquidity and actually undermine our financial system, destabilize our financial system. He always denied that. He said that it was a market structure issue. Do you agree or disagree with your predecessor?
Well, nothing against my predecessor, who I have a lot of respect for, but as you know, I do have firsthand experience in the trading and investment markets. And I absolutely agree with you that the Volcker Rule in particular has eliminated liquidity, that in the times of crisis, we need market makers to provide liquidity, not proprietary trading, but liquidity for market making, and that's something we're very focused on fixing.
Thank you. Yield back.
Time of the gentleman has expired. According to the earlier reference memorandum of understanding, the chair will recognize 2 Republicans in a row. The chair now recognizes the gentleman from New Mexico, Mr. Pierce, chairman of our Terrorism and Illicit Finance Subcommittee.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here today. Before getting into my observations from you, I would point out that my friend from California, and I do consider her to be a friend, her questions were edging towards things that would be a violation of the BSA. FinCEN works for national security. Everything that FinCEN has is available to any law enforcement agency, and to release that publicly not only reveals the process, which is extraordinarily sensitive. Again, it looks to be very close to a violation of the actual law itself. So I appreciate your willingness to hold a position there, because it's a very delicate balance. Now, we all know that AML and CFT, those are real threats to the nation. Mr. Secretary, what I really appreciate about your report is that you don't, even with these major threats coming into the nation, you don't lose sight of the mission, and that is on page 2, where you talk about the robust financial system, free flow of credit that fuels the engine of America. Businesses, small businesses, getting access to credit. At the end of the day, that's what you're here for, and that's what we're here for. And so I appreciate the threats and that you're monitoring those, but you're not losing sight of what makes this country work. So thank you for that attention to detail as you approach your job. Now, OFAC they work with Congress, the President, they work with the military to just see that the world's bad actors don't operate. Their major activity is shutting off funds to them, and we can see in the estimates of North Korea and Iran that we've very significantly affected that. But also the Financial Activities Task Force, they have evaluated that as soon as you find a way to stop one action, then another action steps up. So my question is, how do we modernize? How do we update our AMFL, CFT standards? Myself, I see technology as having to be on a constant, robust movement. But tell me a little bit from your perspective on that aspect of how we keep moving ahead of the threats.
So first of all, I do acknowledge your concerns in this area. My number 1 focus is on economic growth, and we're very focused on tax reform as part of that. But my number 2 focus, probably spending 50% of my time on sanctions related and terrorist financing related issues. And as you've mentioned, using technology to stay ahead of these things is very important. We will continue to use all the tools in the toolbox and new tools. That's why we want to set up a terrorist financing unit with Saudi Arabia in the Gulf, where we have people there firsthand working with them and working with our Arab partners. I firmly believe that cutting off the money works. It worked with Iran. It brought them to the table. It works in stopping terrorist activity. I constantly work with Secretary Tillerson, Secretary Mattis, Director Pompeo, General McMaster, on a unified approach to stopping terrorism.
What can we do more here? In other words, be our subcommittee that contemplates your mission in that tell me what we need. If we need resources in a specific area, please share that with me if you can.
We'll do. We need more money for our terrorist financing center in Saudi Arabia, but we'll talk about that later.
Mr. Secretary, you had wanted to make responses earlier to some of the questions. I would yield the rest of my time to you to make those answers right now if you'd like to go into depth where you weren't allowed to before.
Oh, well, I was really going to just thank the ranking member for her activity in support of regional banking in California, and that I had the opportunity to meet with her many times and appreciated her work in California. That's really the extent of what I was saying in my opening remarks.
Well, again, I think from my perspective, if you can get the tax reform that you've mentioned, if you can keep the focus on the small businesses, they're the engine of the economy of the U.S., getting access to credit, those are the major things. And then we fight the AML, fight the financing of terrorism. I think that we've got a big job, and I believe you're up to it. Thank you for being here today.
Thank you. I appreciate that. Thank you very much.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. Maloney, ranking member of our Capital Markets Subcommittee.
Thank you, Mr. Chairman, and welcome, Mr. Secretary. I am deeply concerned about terrorism financing. And during your confirmation hearing, you stated, and I quote, "I agree that law enforcement anti-money laundering efforts face serious challenges if they are unable to determine the beneficial ownership of the various companies and entities that utilize the U.S. financial system. It can be a real vulnerability that various bad actors, including terrorists and criminals, can exploit," end quote. And then you later stated that if confirmed, you would, and I quote, "be willing to work with Congress and the various equities impacted by beneficial ownership due diligence requirements to address this challenge." We have on this committee introduced a bipartisan bill called the Corporate Transparency Act that would require companies to disclose their true beneficial owners at the time the company is formed, and this information would only be available to law enforcement and financial institutions that are required to know their customers with those customers' consent. Our bill says that states can collect this information, but if they do not, then it would be Treasury's responsibility to collect it as a backup. So my question is, do you support requiring companies to disclose their true beneficial owners at the time the company is formed, and Treasury's role in our suggested legislation?
Let me just first say thank you very much for that. And I now understand this issue much better than I did and when my initial confirmation. And I spent a lot of time looking at this internally. It's also a concern at the G7. I can tell you this is not only just a U.S. issue, but our European partners are concerned as they make progress in this area and we don't. So let me first say, I'm very much looking forward to working with you and the committee on a solution to this. I hopefully think this can be a bipartisan solution. It's a complicated issue. We need not only the information when companies are set up, but we need to figure out a way of how that's maintained overall. Obviously, if we just capture the information on day one and it's literally the ownership is moved 1 hour later, then it's not very effective. And I'm somewhat concerned about Treasury perhaps being the ultimate depository because I think the states aren't going to want this responsibility. But we look forward to working with you on a solution.
Well, I think it's critical. We have numerous LLCs that no one knows who owns them. This issue came to us from law enforcement saying they keep hitting a wall and trying to know. And we certainly, if we know who owns things in our country, it's a tremendous step towards combating terrorism financing, which is a huge concern to the city of New York and our entire country. I'd also like to ask you about the debt ceiling, which will need to be raised soon, and I hope it can be done without the usual political drama. but the markets seem to be worried that the ceiling might not be raised in time, and it has already substantially raised the cost of short-term borrowing in Treasury. And Treasury is also expected to have to reduce its issuance of short-term treasuries this fall in order to stay below the debt limit. And at a time when the supply of short-term treasuries is already low because of the shifts towards government money market funds. So my question is, do you agree that the uncertainty over when and whether the debt limit will be raised is causing distortions in the market and is impacting Treasury's ability to borrow at the lowest possible rate?
Well, let me say that I assure you I am very focused on the debt limit. As I've said before, I urged Congress to work on this before anybody leaves. I said yesterday in my testimony, and I will be alerting Congress, that my previous letter on special powers will be extended through September.
Mr. Secretary, my time is almost up, and I want to know if Treasury were to breach the debt limit and start prioritizing interest payments on the debt over the government obligations like Social Security, do you think the markets would view this as a default?
I have no intent on prioritizing. I think that doesn't make sense. The government should honor all of its obligations, and the debt limit should be raised.
Okay. All right. My time has expired.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Missouri, Mr. Lukemeyer, chairman of our Financial Institutions Subcommittee.
Thank you, Mr. Chairman, and thank you, Mr. Secretary. Over here. There we go. Thank you for being here and appreciate your comments to date here. I want to also thank you for the Treasury report that you've done. I know it was a tremendous effort, and I think it yielded great results. I want to follow up with my initial question here on what the chairman started or discussed a little bit with you with regards to basically both banks and non-banks that are systemically important financial institutions. Your report discusses the problem with the arbitrary nature of the process. I'm still perplexed as to somebody who deals both with banks and non-banks as to how one can indicate that insurance companies are systemically important. But for now, all my discussion will focus on the bank holding company side. I recently introduced H.R. 3122, my Systemic Risk Designation Improvement Act, and the bill removes the $50 billion threshold, which the chairman discussed with you a moment ago, and goes to a well-established set of standards that more accurately reflect systemic importance, and goes to basically the Fed Systemic Risk Indicator Score, which the Fed already does the analysis of this so that we can save time, money, and effort on everybody's part and use that systemic score. So I guess my initial question is, you made the comment a minute ago that you want to focus on community and regional banks. Some of these regional banks are nothing but big community banks, just big. You better know this than anybody. So again, does it make sense to put an arbitrary figure in there, or do you think we need to go to more a risk-based analysis?
My own preference would be to have the higher of both, so that we have a floor where we know it's not subjective, and then above that, as you've mentioned, the Fed would have the ability, based upon, as you've suggested, the risk analysis.
Okay. We're going to put a chart up here in a minute with regards to cybersecurity. And
I love this chart. I saw it ahead of time.
Well, I'm glad you could see it because it reminds me of an old spirograph toy that I had when I was a long, long time ago as a kid, and it kind of gives you a headache to look at. But then, Mr. Secretary, you addressed this subject also in your Treasury report, and there's a word that is used when discussing this with the different agencies and different banks when they talk about this. It's harmonization. We need to harmonize, stop the duplicity and stop the overlap of the regulators with regards to all of the things that they're having to work with here. And so I would just like to ask you to comment on whether, as chair of FSOC, that's a great position from which you can bring all of the different agencies together to stop some of this overlap and duplicity that's going on and take some of the regulatory nonsense and provide relief for a lot of the banks. Would you like to comment on it?
Yes, well, thank you. It would look like modern art if I hadn't seen it in more detail, and I share your concerns in both my role of chair of FSOC and as well as Fdic. Cybersecurity is a major concern of mine, and we are already working with the regulators on how to consolidate their resources. I'm all for the different regulators making sure, but cybersecurity is one of our biggest risks, and we should make sure that they consolidate their resources, but they do it in a way that they don't have to do it 4 or 5 times independently with banks.
Well, I think some sort of standardization of guidelines and principles, I think, is a good place to start. And so when the regulators come in, they're not having one group say this, another group say that, so that the banks get a mixed message and they have to comply with different sets of rules and regulations. So I think your position as FSOC chair is key to getting that harmonization.
And I can assure you we're already working on it.
Okay.
Thank you.
Thank you very much. One last question before my time runs out here deals with Operation Choke Point. This is something we've been dealing with for a long time. I'm sure you're familiar with it. It's between the DOJ and FDIC, they began to try and drive legally operating businesses out of the financial system because they, for political or our own set of values that they believe didn't match up with their own. And I'm quite concerned, and quite frankly, I'll be honest with you, the FDIC has sort of backed off on this problem for a while, but it's continued with the OCC. And I'd like for your commitment to continue to work on something with us. Now, I realize that you're probably going to try and do your best to stop the nonsense, and that's great, but I am concerned that should you leave, and there's another new administration down the road, 4 years, 8 years, 10 years, whatever it is, that we have a set of guidelines in place to prohibit this activity from ever being able to be done again. Would you help us along those lines, sir?
Absolutely. Look forward to working with you. Thank you.
I yield back to balance my time.
Time of the gentleman has expired. The chair now recognizes the gentle lady from New York, Ms. Velasquez.
Thank you, Mr. Chairman. Mr. Secretary, former Secretary Liu was instrumental in passing legislation that provided Puerto Rico the necessary tools to comprehensively restructure its debt. Prior to his departure, he personally indicated to you that it was important to continue monitoring the situation to ensure Puerto Rico's successful recovery. He recognized that even though the law was critical to providing the breathing room necessary for the local government, a missing piece of the equation were policy initiatives that will jumpstart the economy. In fact, in late May of this year, Senator Grassley restated that, and I quote, extending bankruptcy authority alone could not fix the problem. However, since the Trump administration has taken command, there has been little to no conversation stemming from the Treasury Department on Puerto Rico. What policy tools is your staff considering to assist Puerto Rico?
So thank you for the question. And first of all, I share your concern on the financial situation in Puerto Rico. I can assure you I've personally spent a lot of time on it. Secretary Liu did give me his views on it and his concerns before he left. We do support the legislation.
I know,
and we're using that. And I can assure you I have a team that's working on it actively. It's a very complicated issue. I wish there was a simple solution. There's
I know. 400,000 Puerto Ricans have left the island in the last 10 years. We have 3 doctors leaving the island every day. And so I'm happy in the sense that they're coming to Florida and Ohio. Believe me, politically speaking, it's going to be good for Democrats. But I want to give the option to the people of Puerto Rico for them to stay in Puerto Rico if they choose to. So Puerto Rico is under the territorial clause. It means it's a colony. We, the United States Congress, have a responsibility. So I want for you to commit yourself that you will guide your staff to look at the viable options, including the use of the Exchange Stabilization Fund to help bridge Puerto Rico's immediate needs.
Well, I'm not going to commit to use any specific tools such as the Exchange Fund, but I can commit to you easily because I've already done this and will continue to do it. We are working very closely with lots of people on this. As I said, it's a very complicated issue. So we are trying to balance what a solution would be that's appropriate.
So I was a member of the task force on Puerto Rico to promote economic growth in Puerto Rico. So would you assign a staff, or do you have a staff that has been assigned to monitor the situation in Puerto Rico?
I do, and we're happy to follow up with and have them come meet with you and your staff and get your
Wonderful.
thoughts.
Thank you. Mr. Secretary, in May, Senator Shaheen and I wrote you a letter expressing our concern regarding the administration's decision to eliminate all new program funding for the Treasury Department's CDFI program for fiscal year 2018, and encouraging you and President Trump to reconsider this decision. In June 2017, your own Treasury report states that CDFIs are often the only source of credit and financial services in low-income urban and rural communities. So how do you reconcile the finding of your report and the short-sighted decision of eliminating funding for the program?
Well, thank you for asking that. And I had the opportunity to talk at the Senate yesterday about the same issue. So first, let me say I do support the CDFI program. I think it has been effective. Having said that, we had to make difficult decisions in the context of the president's budget. The overall agenda was to, one, get to a balanced budget, and two, fund military expansion, which is much needed. And this was just a difficult prioritization decision that we've made within the department. I would also comment that as part of our financial report, we did specifically recommend a review of the Community Reinvestment Act and make sure that we meet with consumer advocates, community members, to make sure that that money is being used properly in communities, especially as we're forced to reduce other funding.
I yield back, Mr.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Michigan, Mr. Huizinga, chairman of our Capital Markets Subcommittee.
Secretary Mnuchin, I really appreciate you coming here and being in front of this committee, and as tempting as it is, as you see some others on the other side of the aisle want to talk about anything other than the economy, our international standing, and it's tempting for me to talk about Samantha Power and Susan Rice illegally unmasking people, or Hillary Clinton's illegal use of her email as Secretary of State, or Director Comey illegally releasing classified documents, or Ukrainian meddling in our elections. I think it's a waste of time in this particular committee. So I'd like to move on to a couple of other issues and try to divide those that time equally. First and foremost, we've just celebrated would not be the right word in my mind, the 7th anniversary of Dodd-Frank. And we have seen this be a continual stumbling block to our recovery that we've been trying to get going here in the United States. And I'm wondering, what do you view as the most urgent priorities needed to address and restore confidence and create more opportunities in our economy with our capital markets system? Being chairman of the Capital Markets Committee, very interested in that and the effects of Dodd-Frank. And then I'd like to move on quickly to Volcker.
Sure. So, I mean, I would just say as part of Dodd-Frank, our focus is, first, as I mentioned, community and regional banks. I think another big focus is around housing and housing reform and the qualified mortgage, in making sure that banks that make good mortgages and they want to keep them on their balance sheet, they can. And I think, as you mentioned, the Volcker Rule is a big concern of ours, in that what it does to liquidity, and that we can have proper monitoring of eliminating proprietary trading with managing liquidity.
And I know in your report you had laid out various items, and I'm curious, is there anything specifically on Dodd-Frank that you think we as a committee need to address?
It's the long list is we've outlined, but okay. If I gave you the number one thing, it's probably to raise the limit, as we've talked about. Okay,
great. That is helpful. As has been expressed by a few others, I believe that the Volcker Rule is at least partially to blame for the diminished liquidity in our markets. And this is something that's 932 pages with 29 or just under 300,000 words. This is not an easily digestible quote unquote rule. That's war and peace, frankly, into this whole thing. It's 5 separate federal agencies in there, and I know in your report, I think it was page 132 and 133, you kind of have a chart laying out a number of things, 19 different things specifically that could be used for improving Volcker Rule. And as you had acknowledged earlier, our Choice Act, we actually repeal Volcker in that. That is certainly my preference. You do lay out 8 suggestions for Congress, but there are 11 regulatory suggestions for providing immediate relief. And that is from the Federal Reserve, the FDIC, the OCC, the SEC, CFTC, the alphabet soup of all these regulators. How quickly can we expect to see some relief coming without the legislation necessarily maybe backing that up, but from the regulators themselves?
Well, I mean, I think as you've mentioned, in your legislation you have repealing it, and we don't object to that if that's what Congress wants to do. I don't think the Volcker Rule is what created, or the lack of it is what created the financial crisis. We are very focused on how to fix it, and as I said, there are active discussions at FSOC and with the financial regulators about what we can get a consensus to fix.
Well, we would like to work with you on that and encourage you, as we know, legislative fixes are challenging to get to, but these are regulatory agencies that have the immediate and sometimes immediate ability to flip a switch. So we're hoping to do that. I guess in my last few moments here, I do want to touch on one other thing that Chairman Barr had talked a little bit about, the Iranian situation with aircraft exports, and I'm the former chair of that committee in the last term, and I'm curious, have there been any other financial institutions, be it U.S. or foreign institutions, that have been in contact with Treasury with respect to aircraft exports to Iran?
Again, I can't comment on the specifics that are confidential, but I can assure you we're on top of this.
Okay, well, my time has expired, but I look forward to continuing the conversation. Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Sherman, for 5 minutes.
Mr. Chairman, I want to get one thing clear for the record. Mr. Chairman, you began by quoting people saying that we should be nice to witnesses, and I think that it's important that the record reflect that no comment about being nice to either Democratic or Republican witnesses ever came from me. Now, I want to go through a number of things for the witness to respond to for the record. You talked about the importance of small banks and credit unions being able to make business loans to companies in our districts. That's not a reason for us to take the giant banks off the hook for prudential regulation. It's their near collapse that nearly collapsed the economy. It's the reason for you to deal with the OCC, which is in your jurisdiction, and have them, when they audit banks, and those banks have a prime plus 4 or prime plus 5 loan to a company that's just a little shaky, that they have a reserve of just an extra 1 or 2% rather than 30 to 50%. You, Mr. Secretary, could do more than any of us to get small business loans made by local banks. The debt clock has been behind you. You commented on that. I would hope that any tax reform that came out of your department or that was supported by your department would not increase that debt according to the CBO. And we just voted in the House yesterday not to cut the CBO because they are the umpire here in Washington to determine what increases and decreases the deficit. I'd hope you would use your power on FSOC to break up the too big to fail banks. The debt limit is just over the horizon, and I hope that you would use your voice to remind us that it's not enough to deal with the debt limit in overtime, after you've used extraordinary measures to keep us from defaulting. The harm is to our economy now because investors have to price in the risk that America will default on its debt. You probably didn't think you'd be dealing with Armenia today. We need a U.S.-Armenia tax treaty. Your department needs to allocate one tax lawyer for a few weeks. And in making the decision as to whether to allocate a tax lawyer for a few weeks to the project, you'll be told that we should make the decision based upon the size of the business transactions with that country. I hope that you would direct your department to add 2 more criteria. The first is whether the other country is willing to use the U.S. model treaty. Because if they're willing to sign on our bottom line, you don't have to commit much in the way of resources to negotiating the treaty, and you build momentum internationally for other countries accepting the U.S. model. And second, I hope you'd listen to the State Department when they testified before my other committee, Foreign Affairs, just yesterday, that it is important geopolitically that we have this treaty. So I will get you the letter from the government of Armenia saying they're willing pretty much to sign the bottom line that the United States has presented. Now I've got some questions. Is China a currency manipulator today?
First of all, on Armenia, we're happy to follow up on your office. I do stay on top of a lot of issues, but I must admit that's not one I'm on top of. But we will.
That's one you should respond to for the record. I look forward to working with you. Is China a currency manipulator?
I think, as you saw in our most recent currency report, we did not label China a currency manipulator at this time. However, they have been a currency manipulator in the past.
Since they have been a currency manipulator, are you in favor of tariffs or other actions to recoup for America the jobs we lost when they were a currency manipulator? Or is it that they can, as long as what they did was in the past, we're not going to respond?
I can assure you that the President Trump is very focused on the economic and trade issue with China, and nothing in the past is in the past.
Let me squeeze in
one more. All tools will be on the table.
One more question, and that is, your department fined ExxonMobil for violating our sanctions against Russia. Are you confident that your department made the right decision, and why aren't you holding any individuals responsible, since a corporation is an inanimate construct? Individual people undermined our sanctions.
Let me first comment that obviously I am highly aware of the situation and the decision. It is under litigation, so it would be inappropriate for me to make any specific comments. And thank you for being nice on me since I'm a California resident.
I'll get you next time.
Time of the gentleman has expired. The chair now recognizes the gentleman from Wisconsin, Mr. Duffy, chairman of our Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Thank you, Secretary Mnuchin, for being here. I just would like to note that it was not Rex Tillerson who set the reset button with Russia. That was actually Hillary Clinton with this stupid little button that she pushed. It was Romney who said that Russia was our greatest threat, but it was Barack Obama who said the 1980s want their foreign policy back.
Mr. Chairman.
And it was Bill Clinton who received $500,000 for a speech.
The gentleman will suspend. For what purpose does the gentlelady from Wisconsin seek recognition?
I was just reminding my good friend and colleague from Wisconsin about he was not here when you recited the rules about
Does the gentlelady have a parliamentary inquiry?
Yes, sir. I do.
Would you state your inquiry?
My inquiry is whether or not this particular discourse violates the rules that you articulated earlier when Mr. Duffy was unavailable.
The gentleman's questioning has violated no House rule or committee rule. The time belongs to the gentleman from Wisconsin. He may proceed.
Thank you, Mr. Chairman. I would also note that it wasn't Melania Trump who received $500,000 for a speech to an investment company that was tied to the Kremlin. As you've noted, we have a lot of folks on the other side of the aisle who are part of the Impeach Trump movement. They were trying to impeach Trump before he was even sworn into office. So as my friends, I know this is a little off topic, but as my friends are talking about Russia across the aisle, do you have any idea what's being talked about in Wisconsin today?
Sorry, absolutely. 13,000 new jobs and a $10 billion investment from Foxconn to build the most advanced manufacturing plant in the United States, and for the first time, and I can't even remember how long, to build TV screens and other videos. It's just extraordinary, and I was pleased to be at the White House yesterday for that announcement, and congratulations to Wisconsin. I know it was a very competitive situation with other states, and boy, that'll be a big deal for that economy.
And we were happy it's not going to California, I'm sorry to say. But that's right, but we're talking about jobs. We're talking about economic growth. We're talking about industries that my friends across the aisle, they had written off. They had said, these jobs will never come back. They're gone forever. And under your boss and my governor, to your point, $10 billion investment in 3,000 to 13,000 jobs in the great state of Wisconsin. That's what people care about.
That doesn't include the construction jobs, I might add, and the creation of, I think, what you're calling now Wisconn Valley.
Wisconn Valley. That's right. That's what we're talking about. And maybe that's why my friends across the aisle have lost 1,000 seats across government, because they don't understand that people care about jobs and the economy and border security and a strong military. And the heart of all of that is our financial service sector, which is what we're talking about today. But I'm going to go off topic again and ask you about our tax code, because I think if we're going to have more Foxcons, we're going to need a revamp of our tax code. We've heard some rumor that some in the administration have said the top rates might not be going down, they might be going up. Do you want to give us some clarification on your view of taxes and where they should go to make America competitive again?
So we've been working very closely with the leadership of the House and the Senate to create a unified plan. Our objectives are very simple. On the personal side, we want to cut down the number of brackets. We want to simplify taxes. 95% of Americans will be able to do their taxes on a giant postcard. That will make my job overseeing the IRS much simpler. And on the business side, as you pointed out, we want to transition from a worldwide system where we allow companies to defer and not pay taxes and leave $1 trillion offshore to a territorial system that's competitive with a competitive rate that will bring back trillions of jobs, trillions of dollars, and huge amounts of jobs and capital to this country.
And I would just note that I don't think this is a partisan issue, making or allowing companies to stay and compete in America, but also bringing other companies like Foxconn to the United States of America for American jobs. Not Republican, not Democrat. These are American issues making us competitive again, and I would hope that both sides could come together and work on tax reform so we don't have to craft bills that have to get through budget reconciliation, which I don't think works very well. One harder question for you, though, on point. I do have some concern about the U.S.-EU covered agreement. The president, who I have been supportive of, talked a lot about bad deals being negotiated by the prior administration by stupid people. I think that's what he said. This deal was announced the week before President Trump was sworn into office. I know that we've talked about this, and I appreciate your conversation. I've spoke with your staff. We sent you a letter, 21 signers. We pointed out 7 things that we have concerns about. I know you are going to send a letter of your understanding of this agreement. You're not going to renegotiate it. I do have a concern that we don't have an exchange of letters that everyone is agreeing to clarify our understanding of what this agreement means. My time has expired, but I want to make sure that we get the negotiation prowessness of yourself and Mr. Trump to make sure this deal works for American insurers and our state-based model as opposed to an international system that doesn't work for America.
Time of the gentleman has indeed expired.
I yield back.
The chair now recognizes the gentleman from New York, Mr. Meeks.
Thank you, Mr. Chairman. Mr. Secretary, let me just ask first, when you became the Secretary of the Treasury, you had to take an oath of office, correct?
That is correct.
Okay. Now, just so that I'm clear, that oath of office was to the United States of America and our Constitution, or was the oath of office to the President of the United States?
It was to uphold the Constitution.
And you're aware, because I know we were talking about current events recently, of the current events, because I want to make sure that you're able to do your job. The current event recently is, for example, the President of the United States is telling the Attorney General that he should be protecting the President as opposed to the Constitution. Most folks, Democrats and Republicans, believe that maybe that the Attorney General did the right thing by recusing himself from any investigation that dealt with Russia. So, my question to you, given that the President is talking about that he wants loyalty and protection, because he says that the people, his administration, is not protecting him, that in matters that are serious to the Department of Treasury, Are you going to protect the President of the United States, or are you going to uphold the Constitution of the United States?
I think in many cases in my job, it's one and the same.
No, you think it's one and the same.
I said in many cases. I said it's many cases.
So then that gives me serious concerns.
No,
then, sir.
what I said is in many cases.
No,
But I assure you I will uphold the Constitution.
You're claiming my time.
Time belongs to the gentleman from New York.
That gives me serious concerns because there are many allegations about conflicts of interest by the President of the United States, and there is an ongoing investigation against the President of the United States about his involvement in Russia. And if there's someone that tells me that you believe that your obligations, even if the president, because I thought that no person was above the law. So your oath of office, from what I heard, was to the Constitution of the United States of America, not to Donald Trump, the President of the United States.
Let me just be clear. My obligation is to uphold the law. We've cooperated with all investigations, and we will absolutely do that.
Let me reclaim some time, because you know that the United States Congress has some huge responsibilities also. So now I am concerned because the United States Congress, what they've done, bipartisan, we're about to implement a sanctions bill against Russia. And in that sanctions bill, there's some authority that OFAC has to enforce certain protections. So maybe I should ask you this question first. Do you believe, Mr. Secretary, that there is corruption in Russia? Yes or no?
Yes, I'm sure there is corruption in Russia.
Okay. Now, if you believe that there is corruption in Russia, and have you read or understand the sanctions bill that we are doing in a bipartisan way in the United States Congress, both the House and the Senate? Have you familiarized yourself with that bill at all, sir?
Of course I have.
Okay, and so you know what your responsibilities are under OFAC?
Of course I do.
Okay. So then, have you also made some plans on how you will implement the sanctions bill, or how the Treasury Department will utilize the sanctions bill in regards to Russia, sir?
We've looked at it.
But have you thought about how you would do some planning to go against what you admit, the corruption that is taking place in Russia, how the Treasury Department would protect the people of the United States, the Constitution, not the president? Have you thought about how you would implement that, or can you do that on your own, or must you go back and get some clearance from someone else?
I don't need to get clearance from anybody else, and I assure you we will work with Congress. I do have certain concerns that we may have.
Let me reclaim my time, because I'm just concerned. I got 45 seconds left, because I am concerned that when I see others in the administration trying to do their jobs, the president then tweets something, and there's been inconsistencies. For example, just quickly about the debt ceiling. You have said at one point that the debt ceiling should be clean. Others in the administration said the debt ceiling should be, you should be able to include some increases or change it. So what is your position now? Should there be a clean debt ceiling when we pass it, or should there be other things added to it?
The president's been very clear that I'm responsible for the debt ceiling, and my position has been that I believe there should be a clean debt ceiling.
So you're not for, as others in the department have talked about, in regards to that there should be additions to the debt ceiling or add-ons to the debt ceiling?
Again, Director Mulvaney and I are on the same page that I am representing the administration on this.
Time of the gentleman has expired. The chair now recognizes the gentle lady from Missouri, Ms. Wagner, chairman of our Oversight and Investigation Subcommittee.
Thank you, Mr. Chairman. Over here, Secretary. Welcome, and thank you for appearing before this committee today. I dearly and sorely want to get back to the purpose of this hearing today, which is to talk about Treasury and the state of the international financial system. I first want to commend you regarding the Treasury report you recently released, focusing on regulatory burdens for financial institutions. And I was honored to be present in the Oval Office with the President of the United States on February 3rd, when he signed the executive order directing you to conduct said report. Many of the proposals in the report will go a long way towards alleviating regulatory overburden, especially especially for community financial institutions, so that lending and economic growth can continue. Another thing that I am particularly concerned about, Mr. Secretary, particularly with my role also on the Capital Markets Subcommittee, is that we now have about half as many public companies in the United States as we did 20 years ago. Additionally, there has been a decline in IPOs, or initial public offerings, during the same time, without a corresponding decline in the number of business startups. I understand that Treasury is expecting to issue a capital markets report later this year. Will that report focus on the issue of the declining number of public companies and IPOs?
We're happy that will be one of the issues we'll consider. Thank you.
And why should we care about this trend?
I think, as you've said, we care about creation of businesses. We want to make sure that there's not too much consolidation in certain industries, that there's proper competition, and that there's job creation.
And what are some of the regulatory and other impediments that are chilling the IPO market or negatively affecting company decisions to access capital in the public markets?
Well, I think, as you know, there are a lot of issues, and we will address those in the report and look forward to working with you.
And why is reversing this trend important for both, I think, the broader economy and for individual investors?
Well, I'm more focused on broadening the economy than necessarily individual investors, but it is important for individual investors for their retirement and be able to invest in things. I would say in broadening the economy, again, it all gets back to jobs. We are very focused on how we get to 3% GDP, which we think is critical. The difference between 2 and 3% is trillions of dollars.
And we haven't been there, Mr.
years.
Secretary, for a long time.
We haven't, but we have over a long period of time. Thank you.
And how does a healthy public market impact small company growth, and what impacts does it have on job creation?
Limiting capital to industries limits job creation and investment.
I thank you, and I'll yield the remainder of my time to the chairman, if he so chooses.
Well, I thank the gentlelady for yielding. Another question, Mr. Secretary. So in the Treasury report, it proposes a regulatory off-ramp, much like the off-ramp that we have in the Choice Act. And I think you're familiar with, in the Choice Act, a banking organization that maintains a simple leverage ratio, non-risk weighted, of 10%, essentially has a Dodd-Frank off-ramp. So can you talk to us about how this kind of regulatory burden capital trade-off could help spur economic growth?
Well, Mr. Chairman, we do share your view that the off-ramp is one of multiple solutions. It's not the only solution. But again, going back to what we said earlier, our number one objective is to make sure that the top 8 banks don't go from 50 to 70% market share or 100% market share, and that we have a robust banking system with community and regional banks that can grow the economy.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Georgia, Mr. Scott.
Thank you, Thank you, Mr. Chairman. I'm over here. I want to ask you 2 questions. Let me get the first one out of the way first. We've had some discussion about the debt limit. I just want to remind you that your predecessors, Jack Lew especially, would send us estimates, would say and give us a running account of when that possible time would come. But when your responses to that has been, you've said Congress should act. and then you said, and you keep providing us with a nebulous deadline of sometime after September. Now, Mr. Mnuchin, you and I both know that the market's worst enemy is uncertainty, not to mention uncertainty around the debt limit, which also plays a role in what the Fed does. And keeping that sterling credit rating, AAA, all around the world is what it sustains us. It is the backbone of what keeps our country the #1 financial system. So let me just ask you, can you commit to this committee today that within a week you could follow the example of your predecessor and send to us your best estimate as to when we will reach the debt limit? Can you do that?
Again, first of all, thank you for that question. And I'm very familiar with financial markets, which I've been involved in for the last 35 years. So I do understand this issue very well. I've been very clear on it publicly. I can tell you today the answer to that question.
What is that?
That it is, I have said, that I am comfortable that we can fund the government through the end of September, that based upon my information at this time, which is subject to change, given big moves, but my best judgment right now is through the end of September. I've said that publicly. This is not the first time.
Thank you.
I will also,
I got your answer.
Thank you.
I only have a few minutes, and I got to get to this other question. Now, I want you to know that this effort and concern on this committee with President Trump and the Russian connection, there was a movie called The French Connection also. But I want you to know that what Ms. Waters' bill and her efforts in this is not a Democratic alone position. I work with both Democrats and Republicans. I have friends on both sides of the aisle. And it is a growing consensus among Republican members of Congress that we owe it to the American people to come clean on this. President Trump is not bigger than America. This isn't about him. It's about the American people. And I love this country. I was born in the middle of a tobacco field in Ainer, South Carolina. But I made it all the way up to the Wharton School of Finance. And not only that, to serve on the executive board of directors of the best school of business and finance at the University of Pennsylvania in the world. And I did it with just helping hands because I come from a poor families. So I want you to know, and I want this nation to know, that we deserve to know what it is that President Trump is hiding, that he's willing to turn the federal government, the Justice Department, upside down and inside out. It ain't about him no more. It's about coming to a sense of confidence and truth that we can restore the respect, the power, and authority of our nation, first to the American people and to the world.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Royce, Chairman of the House Foreign Affairs Committee.
Oh, thank you, Mr. Chairman. Again, Mr. Secretary, good to see you. And just following up on the questioning of Mr. Barr, I'd like to thank you for your commitment to leveling the trade and regulatory playing field for our job creators here in the United States. And on this front, unlike at least one of my colleagues, I was very pleased to see that the U.S.-EU covered agreement on insurance and reinsurance moved across the finish line, because that is going to mean billions of dollars in savings for U.S. firms, which can be reinvested in our economy, and that's going to be passed on to the consumers. And I also appreciate your commitment to raising the equity caps for U.S. financial services in China, raising that issue. And I was hoping you could update us on your most recent conversations and how the Chinese side reacts when we push them on that issue of caps. Do you think we could get a win on this front?
Again, I'm going to withhold how they react, but what I will say is this is a yes-no answer. We expect them to be increased. We've told them to that. I don't care how they react. What I care about is when they tell us that there is no cap. So I am not interested in them going from 49 to 52%.
Right.
I want no cap.
I think that's absolutely
I hope you don't
right
mind.
attitude.
I hope you don't mind me using just 5 seconds of your
Sure.
time, because I do want to acknowledge Mr. Scott, and I too share this great love for this country, and it's extraordinary your accomplishments. So thank you.
And let me also say, on the topic of housing finance reform, you've made it very clear that perpetual conservatorship is unsustainable, and you would prefer we deal with Fannie and Freddie through legislation. But as we work towards reform in this committee and in the Senate, we can't lose sight of the benefits afforded the GSEs by previous Congresses. This is one of the problems. There are benefits no other company has, and they are benefits that help create the duopoly and broken system of private gains and public losses. And among those obvious benefits are tax-exempt status from state and local jurisdictions, the ability to issue special SEC-exempted TBA or to-be-announced securities, the ability for the Fed to purchase GSE securities through their monetary policy operations, a perpetual line of credit directly to Treasury beyond the 08 bailout authority, and above all else, the implicit government guarantee that comes with a charter which gave them the ability to borrow at below market rates and ignited the duopoly. And, you know, as someone who was concerned about basically the moral hazard in this equation, in 04 and 05, I tried to have them regulated for systemic risk. I think, Secretary Mnuchin, you understand this. Can you eliminate any of these benefits without legislation? And would you agree that reconstituting Fannie and Freddie as private companies with these congressionally mandated benefits should be avoided at all costs?
I do, and first let me say I look forward to working with you on this. As I've said, we need a solution that creates liquidity for the housing market and doesn't put taxpayers at risk. And if there's any guarantees from the government going forward, they should be explicit and paid for, and done so in a way that doesn't put taxpayers at risk. And we're determined to find a solution, because this is a huge part of the economy, and leaving them in conservatorship for the next 4 years makes no sense.
Well, let me make sure that I understand, as this issue is as important probably as anything that's going to come up today, given our past experience of what happened with the collapse of the GSEs. Do you agree or not that Fannie Mae and Freddie Mac should not, under any circumstances, be reprivatized as privately owned, implicitly government-backed institutions?
So what was the last part of it? Implicitly?
Implicitly government-backed institutions. In other words, under any circumstances, be reprivatized as privately owned, implicitly government-backed institutions.
I agree. There shouldn't be implicit. If there is something, it should be explicit and paid for. Otherwise, it should be very clear there's no implicit government backing.
Thank you, Mr. Secretary.
Time of the gentleman has expired. The chair now recognizes the gentleman with the dashing pink suit from Missouri, Mr. Cleaver, the ranking member of the Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here. I do think that in a democracy, once the commonly accepted rules of politeness are breached, it will be painfully difficult for them to be reversed. And maybe we're there now. And in that regard, the ranking member had talked to you about the letter that was sent. I'm simply hoping that as we move along, that you would respond to letters, communications from her. I personally believe it's impractical for you to respond to every letter that we send you. As you know, each member of this of the Democratic side would send you, a Republican side for that matter. So I'm just hoping that in the future that the letters are responded, that you would respond to the letters in some kind of a timely fashion. Now let me get on. Unless you want to respond to that, I'll move to my question.
Yeah. So, I mean, first of all, as you can see, we have over 50 letters that we've responded to. I can assure you, and I can assure the ranking member, that we will cooperate with you. We've fully cooperated with 3 committees. To the extent you're asking for the same information at other people, I would merely ask for you to coordinate with information we've already received. But we fully intend to cooperate with the committee and be responsive as we think we've done.
Okay, I could argue with that, but I'm more interested in something else at the present time. I was here during the whole Dodd-Frank debate and the development of that legislation, and it was a turbulent time, as you well know. And I will admit that there was a destabilizing component in that legislation as it relates to small banks, community banks. 22% of them, 22% of the small banks, community banks have declined, have evaporated over time, and 25%, this was very troublesome to me, 25% of them say they are anticipating merging with another bank. So what we're going to end up having are the larger banks getting even larger. I think they were helped a little bit because they were exempt from the Durbin Amendment. However, I am asking you, what advice would you give us on how we can quickly remove the burden from small banks? And understand this, in case you don't understand it. I don't know anybody on this side, or the other side for that matter, who believes that we ought to continue to allow this burden to hit small and community banks. So if everybody agrees on it, what do you think we can do and do quickly to remove that burden?
Well, again, thank you, and we look forward to working with you. And I would hope that we could do this on a bipartisan basis as it relates to things that impact community banks and regional banks. So I think we delivered a very balanced report, and many of the regulators have agreed with us. So we have a long list of recommendations, and we'd be more than happy to follow up with your office and go through the specific legislative ones for community banks.
So you would sit down with the chair and the ranking member and work on and work out recommendations to provide that relief?
To the extent they both want to sit down with us, we would be more than happy to do that and support that, yes.
Well, I'm hoping that will happen. Like every other member, I have community banks and small banks who are struggling. And it's a little frustrating to me that all we have to do is change it, is change the legislation, and we don't do it.
I share your frustration, and I think this is the biggest single issue, since community banks know how to lend and will drive the engine of growth.
All right. And by the way, I'm wearing this pink so my friends can find me quickly.
I was going to say, definitely best male-dressed in the room.
Time of the gentleman has expired. The chair now recognizes the gentleman from Oklahoma, Mr. Lucas.
Thank you, Mr. Chairman. Secretary Mnuchin, thank you for being here today. As you know, I serve on the, as you may know, I should say, I serve on the Ag Committee in addition to this committee, and thus I care a lot about the use of derivatives and similar instruments that can help my constituents manage risk. As such, I'd like to visit with you about margin requirements for a moment. First, I was very pleased to see that your department's recent report suggested excluding margin from centrally cleared derivatives from the supplemental leverage ratio. And I thank you for coming to that conclusion, as the regulation reduces the number of clearing options available to customers. I really hope that gets reviewed and remedied soon. And second, I would want to ask you about margin for inter-affiliate swaps. While the CFTC's rules have distinguished internal transactions within the same company when setting margin requirements, the banking regulators have not. And this raises some concerns for me, not only because it creates a patchwork effect of regulations in the U.S., but the approach of the banking regulators is inconsistent with that of the Asian and European regulators. So having said that, do you have any comments about whether an approach more like the CFTC from banking regulators would level the playing field and unleash significant amounts of capital into the market, Mr. Secretary?
Well, we look forward to working with you. And yes, on the first issue, we think where there's central clearing, that should be accounted for. And on the inter-affiliates, we look forward to working with you, and that'll be one of the issues addressed in our subsequent reports.
And that's very important, because to tie up capital that should not be otherwise tied up, to reduce the options that my, for instance, ag and energy people have in being able to manage the risk in both selling their commodities and securing the resources to do their work. It just, I think, in the environment we're in right now, the approach taken by CFTC and the initial report from your people would tend to think that we'll be in a position to address that, so to speak. And the remaining time, I'd like to commend your department for suggesting in its report that the recent leveraged lending guidance be reworked. As I told Chair Yellen earlier this month, much of the energy industry is considered distressed, which means it is harder for them to obtain capital under the leveraged lending guidance. Could you briefly tell the committee why your department suggested withdrawing the guidance and what you think would happen if the guidance were done in a better fashion?
We think it would help lending significantly. And again, that doesn't mean that banks shouldn't properly underwrite loans. They should, but that we don't support a blanket, across-the-board approach that cuts off leverage lending.
Absolutely. Allowing bankers to be bankers, and in the case of energy industry people in my state, where they have proven barrels, they have proven MCF in the ground, they have the proven ability to deliver, the proven ability to continue in their business, creating a situation where, in effect, we push them over the edge arbitrarily just seems counterproductive and literally destructive. So I appreciate that. And with that, Mr. Chairman, I yield back the balance of my time.
Gentleman yields back. Chair now recognizes the gentlelady from Wisconsin, Ms. Moore, ranking member of the Monetary Policy and Trade Subcommittee.
Thank you so much, Mr. Chairman. I'd lost 5 seconds. Okay, thank you so much, and welcome again, Mr. Secretary. Mr. Secretary, I was really relieved to hear you say on a number of occasions this morning that you are going to be very vigilant on anti-money laundering and counter-terrorist financing compliance. And so given that, I just want to put a few things on the record and find out whether or not you think that certain kinds of investment activity raise concern and warrant heightened scrutiny from regulators and law enforcement. That, of course, our president and his family have engaged in. Investments with parties who have admitted to or have been accused of or convicted of crimes. Do you think that's problematic, yes or no?
It sounds that way, but it depends
on
the specifics.
Thank you. Oh, well, I can be specific. How about Felix Sater, who helped build the Soho projects He's
I'm not aware of any of the specifics
well,
of that,
okay.
nor
well,
would be
you're the-
appropriate
you're
for me
the
to comment.
Treasury
That's not
Secretary.
part of my job.
Investments where apparent enterprise lacks a significant or economic basis, do you think that's problematic? Like mirror trades?
What was the last part?
Mirror, like in a mirror trade.
I don't know what you're. I'm not connecting this to the terrorist
Investments with
financing
concealed
issues.
parties and investments with politically exposed. Well, I could consume all my time, but I would just bring to your attention that there have been, these are not secret things. They're exposed, they're in the news for everybody to read about the partnerships that the Trump family has with people who have been convicted of crimes, who've been associated with Russian mob activity. And I was just wondering, for the record, if you thought that that was problematic.
Again, it's really not part of my job to comment one way or another on that. My job is focused on terrorist
You're the
financing.
Secretary of the Treasury. You're in part, the SEC, the Foreign Corrupt Practices Act, these are all things that you have jurisdiction over.
No, the SEC I have no jurisdiction over.
All right. Let me ask you some more questions. I mentioned in my opening statement, I talked about conflict minerals, and I talked about the disclosures for extractive industries, which you supported. What were the judgments you relied upon to support eliminating disclosures for extractive industries and for, in the Choice Act, eliminating conflict minerals? And so since you seem to need examples, I'll give you examples. ExxonMobil, as you know, the Treasury just fined them for corrupt dealings with Russia. And conflict minerals, you're familiar with the horrific civil war that's ravaged the Democratic Republic of Congo, and how armed groups took control of the mines, used the proceeds to fund armed conflict, and those minerals ended up in the U.S. consumer market. And thereby, we as U.S. citizens have inadvertently funded the killing, rape, and destruction in the DRC. So upon what judgment did you rely to decide that we don't need these provisions?
First of all, I just want to comment on the Exxon. It was not on corrupt dealings. It was on an OFAC violation. In regards to the mineral issue, and again, we think there's a lot of problems, as you pointed out, and we'd be more than happy to follow up with your office and talk more about this issue.
I would like to yield the last minute to the ranking member.
Thank you very much. I'd like to thank you, Ms. Moore, for delving into some of the many issues that we are so very concerned about. What Ms. Moore walked through was relationships. President of the United States have relationships with those who have been jailed, who have known to have mob contacts, who have been involved in criminal activity. And as the treasurer, she was asking you, what do you think about that? And the real question in all of this is whether or not you see your responsibility to make sure that you are protecting the people of this country, respecting the Constitution of the United States, or as it appears that this president is demanding of those in his cabinet and others that they spend their time protecting him. And basically, that's the question.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Florida, Mr. Posey.
Thank you very much, Mr. Chairman. Secretary Mnuchin, I appreciate you being here today. For more than 6 years, 6 long, torturous years, I've been fighting for a group of heroes that were once held captive. On February the 13th, 2003, 4 Americans who were Department of Defense contractors on a U.S. government counter-narcotics flight mission in Colombia were shot down by the Revolutionary Armed Forces of Colombia, or FARC as they are commonly known, a designated terrorist organization that controls more than 95% of the world's cocaine business. The pilot Tom Janis, a retired member of the U.S. Army's Delta Force, was executed on the spot, and 3 Floridians, Keith Stansel, Mark Gonzalez, and Tom Howes, who happens to be my constituent, were captured, held hostage in the jungle, and severely tortured for more than 5.5 years until they were rescued by the Colombian Army. These Americans and the Janis family obtained a federal judgment in 2010 under the Anti-Terrorism Act for damages against FARC to compensate them for FARC's acts of terrorism during their captivity and the execution of 1 American. However, there are no FARC assets in the United States except for drug monies of FARC agents, the traffickers and money launderers, and these assets are frozen under the Foreign Narcotics Kingpin Designation Act. Under current law, victims cannot access frozen assets under the Kingpin Act. I believe the victims of the foreign terrorist organizations, which profit and fuel their activity with drug money, should be compensated from that drug money that we've secured. In the 114th Congress, I introduced legislation titled the Clarifying Amendment to Provide Terrorism Victims Equity Act, or CAPTIVE Act is the acronym, to change that law. My bill passed the House by unanimous consent last year, but was stalled in the Senate when the Office of Foreign Assets Control raised concerns about the bill that they never mentioned to us in the House. I introduced the legislation this Congress, and I'm hoping to bring the bill to the floor soon. The situation right now is that the former hostages have been waiting 14 years for justice, and so far they've received absolutely zilch help from the U.S. government that they serve so heroically because of the Office of Foreign Assets Control. I'd like to get a commitment from you to work with me to find a solution to make these brave Americans whole again. Do you think we can work together in that regard?
Absolutely. Let me first comment on, it sounds like it was a horrible situation, and I'm not familiar with any of the details of what OFAC's concerns are, but I'm more than happy to work with you in your office on the legislation and understand it.
Yeah, your predecessor gave us all kinds of song and dance, but he seemed relatively unconcerned. But I appreciate your concern and look forward to working you together.
We'll follow up with you.
Thank you very much. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Minnesota, Mr. Ellison.
Let me thank the chair and the ranking member. Secretary Mnuchin, one of the worst moments I experienced in my service in Congress is the financial foreclosure collapse that occurred in 2008. I don't ever want to see it again. I'm sure you agree with me about that. And so I'm concerned about your approach to supervising the mortgage market and making sure that banks that are engaging in issuing mortgages are upholding high standards of ethics. So to that degree, could you explain to me how OneWest, of which you were the CEO, was able to engage in 5,600 violations of foreclosure sale auctions, including backdating in nearly all of the 35,000 foreclosures of homes that you all engaged in?
First of all, let me assure you that I did not make one mortgage during or prior to the mortgage crisis. I took over 3 banks from the FDIC, one of which was the worst originator in the entire world. I'm very proud of the fact that we started loan modifications at IndyMac under the FDIC's control, which we then did. So I take great offense to anybody who calls me the foreclosure king.
Well, let me tell you,
whatever issues
reclaiming my time. You know how that goes.
Whatever issues.
Sir, I allowed you to answer, and I'm reclaiming my
Secretary,
time.
the time belongs to the gentleman from Minnesota.
Look, I don't have a problem with you answering, but you did answer, so I'm not going to let you filibuster. That's what I won't do.
I'm not filibustering.
No.
I take
There's
great
no
offense
question.
to your
There's
comment.
no question before the Secretary.
Okay, wasn't there a rule?
There is no question before the Secretary at this point. So, Vice President Erica Johnson SEC robo-signed 6,000 foreclosure-related paperwork documents per week. Was she under your supervision?
Not directly.
When you were the CEO, was she employed under you?
She was employed at the bank.
She said in testimony that she robo-signed as many as 6,000 foreclosure-related documents a week. What's your position on robo-signing?
You know, I've answered this extensively.
You have to answer it now, sir.
I'm going to, and you have to listen to me.
No, I don't. No, I don't have to listen to you.
Okay, well.
I asked you a direct question. I'd like an answer. Would you?
Give me the direct question. If you're not going to listen to me.
Are you willing to answer the question or not?
Repeat your question.
What is your position on robo-signing?
Again, I don't even think you know what the definition of robo-signing is.
You don't know what I know.
There's not a legal definition of robo-signing.
Okay, how about this? Do you deny that under your supervision, robo-signing occurred at the firm that you were the CEO
I
of?
have reported before
and are you
that
willing,
there was not robo-signing, and I've said this on.
So you deny it, for the record. Thank you.
For the record, I've denied it before.
Right, and you're denying that, well, also for the record and under direct testimony, person under your supervision admitted to it. And for people watching, I'll just let you know, robo-signing is when you have when you're signing documents to get a loan to purchase a home, and you have to review the documents. You have an obligation to review them, and to just sign them as you are going through without reviewing them is not proper and is illegal because you're swearing that you've reviewed those documents. And under the Secretary's supervision, which he claims I don't know anything about robo-signing, that happened to a very severe degree while he was the CEO of One West. Here's another question for you, sir. One West was 9 times as likely to foreclose on a homeowner living in a community of color as originating a mortgage to a borrower living in other communities. Are you concerned about the disproportionate number of people who found themselves in foreclosure at the hands of your company who were persons of color? Where are you at on making sure that there's an equal administration of justice for companies as they engage in foreclosure?
Let me assure you that we upheld to the strictest amount the rules and regulations as was reviewed by the OCC, the Fed, and the Consumer Protection Bureau, and we did not and would not discriminate in any way.
Well, we'll see.
Time of the gentleman has expired. The chair now...
Parliamentary inquiry.
For what purpose does the
Mr.
ranking
Chairman, would you
state your
like-
inquiry?
Thank you. Would you like to give the Secretary an opportunity to apologize to Mr. Ellison for
Not a
for
that
assuming
is
that he's
not
too
a
stupid to
proper
know what
parliamentary
robocalls are?
inquiry.
Would you like to give him that
The
opportunity?
time now belongs to the gentleman from Illinois. Mr.
Chairman.
Holmgren is recognized for 5 minutes.
Thank you, Mr. Secretary.
Or perhaps could I borrow 10
Yeah,
seconds
absolutely.
of
I was
your
going
time?
to, you can do more than that.
Thank
I'd like you to have a chance. you to
I'd
give
like
a
the
chance to
record to state that One West Bank was the only bank that concluded the independent foreclosure review, and every single loan was reviewed and was properly compensated. We were also, the only bank to have done all those loan modifications, and I take great offense in that anybody who calls me a foreclosure king or anything else. And Ranking Member, I've had the opportunity to talk about this with you many times before, and this is nothing new, and I'm very proud of One West's record, and I'm not apologizing to anybody because robo-signing is not a legal term, and I was being harassed.
You're under oath.
Thank you.
The time does not belong to the ranking member. The time belongs to the gentleman from Illinois. The time...
Thank you.
The time belongs to the gentleman from Illinois. He may proceed.
Thanks, Mr. Chairman. Thank you, Mr. Secretary, for being here. The Treasury Department's June 12th report makes a number of recommendations regarding the harmonization of our cybersecurity framework. Specifically, the report recommends further coordination on two fronts. One, financial regulatory agencies should work together to harmonize regulations, including a common lexicon. Two, financial regulators should work to harmonize interpretations and implementation of specific rules and guidance around cybersecurity framework. I believe both of these are very important goals. I wondered if you could just talk briefly on how the Treasury Department plans to facilitate these efforts, and is there anything we in Congress can do to help support this work?
Yes, we look forward to working with you. It's very critical. Cybersecurity is a very, very important issue, and we're working closely with all the regulators on it.
Please let us know, again, how we can provide assistance.
Thank you.
We just know so much the importance of confidence of consumers in security, so thank you. I know you've touched on a little bit the Volcker Rule. I want to go in a little bit more on that. As you know, venture capital funds and startup companies in which they invest are the innovation and job creation engines of our nation. Page 77 of the Treasury's Department June 12th report recommends changes to the Volcker Rule as covered funds provisions to assist in the formation of venture and other capital that's critical to fund economic growth opportunities. Wondered, Mr. Secretary, have you discussed this specific provision of the Volcker Rule with the agencies that have authority to make amendments? If so, what feedback have you received? And then follow up on that, how does the Treasury Department plan to pursue amendments to the Volcker Rule that could conform to existing laws? In other words, how would you encourage the regulators with rulemaking authority to undertake this important work?
Well, again, there's a two-part process we're going through. One part is working with the regulators where we can clarify the regulatory issues, make clear definitions, so again, people can follow the Volcker Rule, but follow it appropriately and understand it. And then also, we'd be more than happy to work with you in Congress on certain legislative changes to further help that.
Good. Thank you. I believe it is important. We want to help. On the June 12th again report states significant adjustments that should be made to the calculation of the supplementary leverage ratio. And particularly, deductions from the leverage exposure denominator should be made, including for cash or deposit with central banks. I certainly agree with this recommendation, and I've worked closely with members of this committee, such as Keith Rothfuss and Bill Foster, to get some regulators to help understand our concerns. I wondered, how do you plan to work with the Fed, FDIC, and OCC to amend the supplementary leverage ratio? If possible, could you share a timeline for when these concerns might be addressed?
Well, I don't have a specific timeline, but we're working very closely with them, and again, we're hopeful that we can make progress on that. Thank you.
I hope so as well, and we'd love to be helpful there. Last minute, maybe one more question. I understand the administration has been putting together some ideas on comprehensive tax reform. I absolutely agree that we need a more efficient tax code, and it would greatly contribute to economic growth. Outside the work on this committee, I'm also very focused on fighting for tax-exempt financing for states and local government, specifically for preserving the tax-exempt status of municipal bonds. I believe this local decision-making process for investing in infrastructure is working. It's ensuring that we build the roads, schools, bridges, and police stations that our communities really need. And some 160 members of the House of Representatives agree with that by signing a letter that myself and Congressman Ruppersberger passed around. I wondered, have you considered how this existing piece of the tax code fits in with the administration's plan for comprehensive tax reform? If not, would love to follow up with you a little bit more on the importance of municipal finance and specifically the current tax treatment of municipal bonds.
Yeah, so again, we very much appreciate the importance of municipal finance. We want to make sure that state and local entities can continue to access that market in an efficient way, and we look forward to working with you.
Thanks, Mr. Secretary. Thanks for your service. I'll go back.
Time of the gentleman has expired. The chair now recognizes a gentleman from Colorado, Mr. Perlmutter.
Hi, Mr. Secretary. Thank you for being here today. Thanks for your testimony today. Let's start with you being a Californian and me being a Coloradan, okay? And I want to talk about marijuana and banking just for a second, because we now are 28 states plus the District of Columbia have some level of marijuana use, and then if you add all of the states that allow for cannabis oil to try to deal with seizures, that's another 16 states. And so mostly it's a statement to you, sir, that I'd like to make, in California, Colorado having fully legalized marijuana, that it is important that the Treasury Department and the Justice Department really continue to focus on this, because in Colorado, unless we have banking services, the amount of cash just becomes a huge magnet for crime. And it's very important that we allow businesses that are legal in their states to be able to have checking accounts and credit card accounts and payroll accounts. And I would just impress on you, sir, we need to get this handled. And I don't know exactly where you are. I'm not going to ask you on the record, but I just want to make sure you understand this is now way more than half the states of the country. And I would suggest to you that you talk to Mr. Mulvaney and the administration to try to come up with some ideas so we can have banking for legitimate businesses in those states that have some level of marijuana use.
Yeah, well, let me just comment. When I was a banker, I was familiar with this issue, and we were very concerned for the regulatory issues of banking those types of clients, despite the fact that it was legal. So I don't have a view, but we're happy. I do understand the issue. We're happy to work with you, and we do think we need to figure out the regulatory solution.
And I thank you for that. And if you'd work with me and Mr. Heck, and
Be more than
I know
happy
we
to.
have Mr. Kaufman from Colorado, Republican, and a number of Republicans, we would really like to work with you and the department to get this ironed out.
Thank you.
Okay, thank you. Second question, or second statement, I guess, is you used the words cutting off the money earlier on about sanctions and the way that that can work, and I think you were directing that towards Iran, but it also applies to North Korea and it applies to Russia. Would you not agree?
Yeah, and it applies to Venezuela, where we just launched sanctions yesterday to 13 people and will continue to do more.
And I appreciate that, and I thank you for that. So I guess where I'm coming from is, again, with respect to sanctions, we have, because of aggressive actions taken by the Russians in Ukraine and elsewhere, that the department continued to apply those where appropriate, where lawful, and where necessary. So one of the things, I serve on the terrorism and illicit finance with Mr. Pierce, and it's a really good committee, and we appreciate your department working with us. And one of the places where it's very important is on cryptocurrencies. And it appears that the Russians are very adept at making opaque a lot of transactions. And we would ask you and your department to continue to work with us to make sure we're able to pierce those cryptocurrencies so that they aren't using blockchain or whatever other kinds of things. Would you agree to work with us?
I would, and I would also tell you I share your concerns about Bitcoin and others and them being used for illicit activity. And matter of fact, I believe this morning we just announced a major action against a Bitcoin operator. So I share your concerns, and this is going to be a big priority of ours.
All right, last thing I'd like to talk about, and then I'll yield some time to my friend Mr. Ellison, is on the 23rd of July, there's an article called The Future of Banking by Piyush Gupta, which really talks about the technological changes that are occurring within the banking world. And I just give you, well, I don't have much time. What do you see happening with respect to banks given all the technological changes that are occurring?
There's no question banking has changed substantially. Most people don't go into banks anymore, and we need to address that as we think of changes in technology and regulation.
If I could, I'd like to introduce this in the record.
Without objection. Time of the gentleman has expired. The chair now recognizes the gentleman from Florida, Mr. Ross, for 5 minutes.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here. In reading and listening to your opening comments, I laud you on one of your priorities, and when you say the other central component to our agenda for growth is a passage of comprehensive tax reform. And we've talked about this before, and you've expressed how important it is for us to have tax reform if we're going to grow our economy. Now, we are the number one in the OECD with the highest tax rate. I think, in fact, I believe that at 39.08%, we have the highest corporate tax rate of any developed nation. At the same time, our effective tax rate hovers around 20%, and we are 21st in terms of tax revenue as a share of GDP. Businesses make decisions to avoid suffering under the full burden of our tax system. And in my opinion, I think that what we have to look at is what impact this has had on our economy. In other words, if we can lower the corporate tax rate just alone, we can change the equation for how American businesses benefit the American economy. And what I mean by that is we need to look at how they shelter their income. While they're paying 35% up here, but the effective rate's 21 down here, what's happening to that 14%? Are they putting their money overseas in order to take advantage of shelters? Are they looking at choice of form of where they want to be able to locate their businesses so they don't have to have tax implications in the United States? Are they looking at what type of entity are they going to have? Are they looking even at who they're going to hire because of our corporate tax structure? So I guess my question to you is, would you agree that because we're having a little bit of issue here in Congress trying to do comprehensive stuff right now, whether it be health care or anything else, and if we come back here in September and we talk tax reform, if we're only able to do corporate tax reduction, would you not agree that just lowering the tax revenue, and you take into consideration how businesses affect their tax planning by tax shelters, by where they want to locate physically, whether in the United States or not, that lowering of the taxes would more than make up for what any anticipated loss of revenues that the CBO may assess from going from 35 to 15%?
Yes, I agree with you completely. This is not just about lowering the rate. This is about comprehensive tax reform, about changing from a worldwide system to a territorial system.
And we're the only ones in a worldwide system.
Broadening the base.
Correct.
And as you've pointed out, although our stated rate is 35%, most international companies pay significantly less because they can defer income and sometimes not even pay any tax on it.
And as a matter of fact, as we lower the rate, we broaden the base.
We do indeed.
And raise our revenues. Do you agree or disagree with those who say that we will never be able to achieve real GDP growth above the anemic 1 to 2% we've seen since the years following the recession?
I disagree with that. I am very committed that we can get to 3% GDP, and we will.
Thank you. And as an insurance person, I have to ask you, in FIO, look, I am a strong supporter of our state-based regulation systems in terms of insurance. McCarran-Ferguson has been, I think, a very good thing for consumers. It's been a very good thing for insurance companies, for solvency and protections for consumers. My concern with FIO is, while I understand its role to be a facilitator, especially in international negotiations, do you feel there is any need for it ever to be a regulator?
Again, what I'd say is we fundamentally believe in the state-based system, and we support that. So the intent is not for it to be a regulator. I don't know if at some points there may be certain issues that they need to deal with, but we're not looking for federal regulation of insurance.
Thank you. That's somewhat comforting, and I'll yield back the balance of my time.
Gentleman yields back. Chair now recognizes the gentleman from Connecticut, Mr. Himes.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here. Like my colleague on the Republican side, I want to deviate a little bit from the jurisdictional area of this committee because I agree with him that we are presented with a really terrific opportunity for comprehensive tax reform, and I really want to make one point and then ask you a question. Appearances to the contrary, there is actually strong bipartisan agreement on the need for comprehensive tax reform. There are elements of that are very, very important to this side of the aisle. Those elements, amongst others, include maintaining distributional equity in the code. It may surprise you to know that it includes, for a lot of us, a sense of revenue neutrality, both inside and outside the budget window. Something that is not revenue neutral, of course, poses a threat to programs like Medicare and Social Security. But really, and I guess I'll point to my question here, what's really important to us is a process that is regular order and that starts in a bipartisan fashion. And I can draw sort of a dramatic contrast with the way healthcare was brought forward just in the last 6 months. It was a process using reconciliation designed to exclude Democrats, particularly in the Senate. And in fact, the Senate Majority Leader noted that failure would mean having to work with the Democrats. So I really do think process is important here. Hearings, inviting this side of the aisle in early rather than at the end. So my question to you is the White House and is the Treasury prepared to really push that this process be designed for bipartisanship and all of the possible durability associated with that? Or are we going to sadly see something more akin to what we've seen in the healthcare realm?
Well, again, I'd like to hope that it's bipartisan because you point out many of these aspects. I think we have shared values and objectives and goals. And I've personally sat down with many Democrats already to solicit views and get feedback, and I look forward to continuing to do that.
I think a lot of the debate right now is on the Republican side of the aisle over big issues around revenue neutrality, around border adjustment tax, deductibility of interest. I think your and Mr. Cohn's voice will be very strong here on those issues. And I just, I see the president in his tweets sort of blaming the Democrats in the Senate for being obstructionist when the process, at least on health care, was designed to exclude them. And I know your previous career, I know the president's previous career, you haven't been in town that long. There really are signals and processes that you can set up that will set the stage for bipartisanship in the way it wasn't on the healthcare issue. So I just hope, again, I think we all recognize that durability relies to some extent on bipartisan cooperation. We've certainly seen that in the healthcare realm. And I would note, you were probably following at the time, sometimes the Democrats under Obama were accused of having, a process that excluded the Republicans in 2009. That was simply not true. There were months and months of efforts, hearing after hearing after hearing, efforts to attract a number of Republican senators that ultimately did not bear fruit. But I would just note that those attempts were made, and I think the country could really benefit if the White House would commit itself, particularly for something as important to the tax code, to a process that starts out in bipartisan fashion.
Thank you.
Thank you. Mr. Chairman, I'll yield back the balance of my time.
Gentleman yields back. The chair now recognizes a gentleman from North Carolina, Mr. Pittenger, for 5 minutes.
Thank you, Mr. Chairman. Good to see you, Mr. Secretary.
Nice to see you, too. Thank you.
Great to have you here. Mr. Secretary, I want to thank you for your understanding of the role and importance of community banks. I did serve on a community bank board from the time we chartered to the time we sold it. It was very successful. And yet in North Carolina today, I can tell you that we've lost 50% of our banks since 2010. I serve 8 counties, 7 of which are rural. It's had a devastating impact on access to capital and credit, so appreciate your efforts there. Mr. Secretary, as you know, I'm currently working on a CFIUS reform bill with Senator Cornyn. We've hoped to introduce it sometime this fall. One of our primary goals is recognizing the alarming transfer of our new and emerging military applicable technologies that have gone from the United States to the Chinese. And we want to see greater oversight with that. The Chinese investments here in the United States have grown by 350% from 2015 to 2016. And we believe that CFIUS, of course, needs greater teeth and greater reforms. The Defense Department has spoken out on this, that our military's technological superiority is at risk due to this well-coordinated efforts by the Chinese. And a number of officials have spoken out, including the Secretary of Defense, the Director of National Intelligence, Director of the CIA, the Director of the NSA, Commander of the U.S. Cyber Command, and the Chairman of the Joint Chiefs of Staff. I would like to have your clarity on this issue and understanding and really what you believe is necessary in reference to an update in the reforms of CFIUS.
Well, thank you. And as you know, I take my role very seriously there, and I look forward to working with you and others. Again, I hope this is something we can definitely do on a bipartisan basis. There are some obvious changes we need to make to CFIUS, one of which is CFIUS doesn't cover joint ventures. But as we've had the opportunity to talk about, and we look forward to working with you and others, there's a laundry list of changes that we look forward to making with you.
Thank you, sir.
Thank you.
Reference to terrorism finance, which I do serve on that committee, I have some real concerns to date regarding Qatar. I've had several meetings with the Emir and with the ambassador regarding concerns that I have. I've yet to receive any reports of anyone that they've prosecuted for terrorism finance-related issues. They have certainly been involved in financiers who reside there and work there. Hamas works there with impunity. They have been known to have paid significant amounts of ransoms out on the market. And even the Emir said to me that in his efforts to depose Assad, that he worked very closely and supported with al-Qaeda. In that regard, he said, I'll take care of al-Qaeda later. I'd really like to get your input regarding the concerns relative to Qatar, and have they been complicit, and what's the best way to work with them?
Yeah, so we've worked very closely with them. I can tell you that they are cooperating with us and that they take this very seriously. They most recently signed a memorandum of understanding and making certain commitments, and we are committed to working with them and making sure that there is not terrorist financing.
Yes, sir. I appreciate your diligence on that. Additionally, I would like to ask you into one other matter that I've given a significant amount of effort to, and that's relative to the Section 314 of the Patriot Act. I'd like to know your assessment of the current process. We've had a number of meetings with the major banks relative to the transfer of data, the sharing of data between financial institutions and with our government, and regarding the SARS reports, and what can be done to enable the financial institutions to have closer access to data that allow from the government, that will allow them to really hone in on those concerns we really have, apart from looking at the broad spectrum of SARS reports. This, it seems to me, would directly help our concerns regarding privacy and matters for the American people and the data that the financial institutions have on them. So I would like to get your perspective on this particular bill and what can be done.
Well, we look forward to working with you on the bill. I will tell you, when I was a banker and we filed SARS, you know, we always thought they just went into a big black hole and wondered if anything actually happened with them. And I can assure you the first thing I did when I got here is I asked that question. And we do use the SARS very effectively, but we look forward to working with you.
Time of the gentleman has expired. The chair recognizes now the gentleman from Illinois, Mr. Foster.
Thank you, Secretary Mnuchin, for coming here today. I'd like to focus on one of the sparse areas of potential bipartisan agreement, namely the need for forceful and effective national response to any future currency manipulation by our trading partners. As a manufacturing businessman and someone who's co-founded in our basement a company that now manufactures most of the theater lighting equipment in the U.S. and exports a good fraction of what it manufactures, I've been long concerned about the currency manipulation by foreign nations that creates an unlevel playing field favoring their domestic manufacturers. As you're aware, Treasury has been charged by Congress with making periodic reports on currency manipulation. To that end, Treasury's developed an objective, quantitative three-part test, which I strongly support and believe was done very well. In your most recent report, I believe you correctly concluded that 6 countries, including China, should be put on the watch list for violating 2 out of the 3 criteria, but that at present no country satisfies all 3 criteria. The difficulty, of course, is that if in the future any country is designated a currency manipulator, the only mandatory response could be charitably described as toothless jawboning. There is an alternative, which is for the United States to unilaterally declare, as a matter of national policy, that whenever any country is designated a currency manipulator, we would engage in countervailing currency manipulation. Simply put, if one of our trading partners intervened in currency markets to depress the value of their currency for competitive advantage, the U.S. would engage in an equal and opposite currency intervention to cancel this effect. Dr. Fred Bergston of the Peterson Institute has long advocated for the countervailing currency intervention approach as a response to foreign manipulation. He recently published a book on this with Dr. Joseph Gagnon with very specific proposals for this. And while there is some authority under current law to respond in this manner against a designated currency manipulator, it could obviously be strengthened with legislation. So my question is, what specific actions are you considering against possible future currency manipulation if it occurs? And would you be open to considering countervailing currency intervention or other approaches as in a response?
Well, thank you, and we look forward to working with you on this. And I can tell you we have recently studied this internally as it relates to NAFTA, where we're going to be going through a renegotiation process. This is one of the issues we're going to look at adding into the agreement. And I think this sounds like...
Excuse me, but in the case of NAFTA, I believe, in North America, currency intervention, manipulation has not been a major issue.
I understand that. I'm just saying it's only come up because of the legislation and us looking at what we use going forward in trade agreements. So we are focused. I do agree with you. If someone is a currency manipulator and labeled and determined as such, there should be an impact of what that means and not just talk. The idea that you've cited may be one of many. I surely wouldn't want to be required to have to do that because the countervailing size and scale may be quite large, but we do need to have an impact. If someone does manipulate their currency and impacts American companies and American workers, there needs to be an impact and a result.
Yeah, well, the advantage of an equal and opposite intervention, if they go intervene in the market and buy X dollars, we intervene and buy X dollars of their currency. And so equal and opposite is a well-defined and appropriate response to nullify this. Secondly, I'd like to ask you what your reaction is to the idea of permanently repealing the debt limit. There was a very interesting Wall Street Journal editorial by a very prominent, Jason Furman and Rohit Kumar, very prominent members of both parties advocating for this. Among other points they made was that Democrats are currently using the debt limit as leverage to increase spending, which is not normally something Republicans would be enthusiastic about. So I was wondering what your reaction would be and what the reaction of the administration would be to the idea of just saying, let's have an appropriate budget process instead of arguing about whether or not we should pay for a meal after we've eaten it.
Well, I think we got to look at this, and I agree that there should be a change going forward. We're obviously not going to address this now, but we have a debt limit, we have a budget process, and we have an appropriations process. I'm all for there should be very strict controls of spending money, but once we've agreed to spend the money, we should make sure that the government can pay for it.
Right. So the idea of the debt limit as a mechanism is not something you're enthusiastic about?
I'm not.
All right. Thank you. Well, I look forward to working with you on this.
Thank you.
Time of the gentleman has expired. The chair wishes to advise all members that the chair currently anticipates clearing 4 more members before excusing the witness at the agreed upon departure time at 1 o'clock. I anticipate clearing Mr. Rothfuss, Mr. Delaney, Mr. Tipton, and Mr. Heck at this time. The gentleman from Pennsylvania, Mr. Rothfuss, is recognized for 5 minutes.
Thank you, Mr. Chairman. Secretary Mnuchin, over here. Here you go. One of my priorities is to make certain that the regulations that banking agencies implement are tailored to the risks that they address. An area of particular concern is the regulatory treatment of custody banks, and I want to join my colleague from Illinois, Mr. Holmgren, in highlighting this issue. I applaud the conclusion in the Treasury report that calls for exempting cash deposits at central banks from the denominator of the Supplementary Leverage Ratio, or SLR. As you know, this is particularly important for custody banks due to their role as a safe haven for cash in times of financial market stress. My concern is that the unique aspects of the custody banking sector have not been fully considered in previous rulemakings, particularly as it relates to the SLR. In addition to the Treasury report, Chair Yellen, Governor Powell, and former Governor Tarullo have all recognized that the SLR disproportionately affects custody banks and should be revised, but so far no action has been taken. I have introduced a bill, H.R. 2121, the Pension Endowment and Mutual Fund Access to Banking Act, which has 14 bipartisan co-sponsors, many of whom serve on this committee, to address the issue. I say all this to emphasize the broad-based chorus out there to address this issue, and I ask that you keep the committee informed of progress. Can you say whether we can expect action prior to the upcoming January 1, 2018 effective date for the SLR?
I can't commit whether there will be action or not, but I can tell you it's something we're very focused on, and I agree with you, particularly as it relates to custody banks. But the thought that banks could turn away cash in a financial crisis doesn't seem to make sense.
Thank you. As you're aware, a number of us on this committee have expressed concerns about the U.S.-EU covered agreement, which Chairman Duffy mentioned earlier in the process for negotiating future covered agreements. Covered agreements can be a useful mechanism for achieving mutual equivalency with foreign jurisdictions, but we need to make sure that we accommodate elements of the U.S. insurance system that help to foster a robust insurance marketplace, namely the state-based system of regulation. What are some ways that covered agreement negotiations can be improved and made more transparent?
So again, we spent a lot of time looking at the cover agreement. We did negotiate a side letter, which we're comfortable with and is going to be adhered to, and we look forward to working with you further on these issues.
We have heard in a number of hearings and meetings with bankers, and I want to touch on the SARs, which you mentioned, and we've heard that term black hole before. With respect to SAR filing requirements, that they're more often focused on checking boxes rather than providing useful targeted data to FinCEN and law enforcement. They also worry that they ultimately drown out the signal with too much noise. Should the SAR process be reformed to make compliance easier and increase the value of information conveyed in reports?
Well, I think it should be looked at. I mean, I don't know whether it should be reformed or it shouldn't be, but it should be looked at. And again, I can assure you, it is very useful getting these reports, but it's one of the things that we will continue to look at.
Thank you. My colleague, Representative Moore of Wisconsin, and I have introduced bipartisan legislation that would fix the unintended consequences of an SEC rule that went into effect last October that destroyed stable value money market funds as a source of low-cost variable rate borrowing for businesses and state and local governments. The effect has been to limit investment options, reduce short-term liquidity, and significantly increase the cost of business and infrastructure investment. Our bill, H.R. 2319, would restore stable value funds, reversing many of these negative effects. I think this is very much in keeping with the President's executive order on core principles for regulating the financial system. It would empower Americans to make independent financial decisions, prevent taxpayer-funded bailouts, promote American competitiveness both at home and abroad, and make regulation efficient, effective, and appropriately tailored. I understand that the Treasury Department will be issuing additional reports on the executive order to the President and Congress in the coming months. I would ask that you give appropriate consideration to our proposal as part of those efforts.
Will do. Thank you.
With that, I'd yield to the Chairman if he has any questions.
Well, I thank the gentleman for yielding. Some ground that, Mr. Secretary, I don't think we've plowed yet. The Treasury report recommends the frequency of Section 165 resolution plan submissions to 2-year cycles. I think that both Federal Reserve Governor Powell and FDIC Chair Grunberg have testified they supported it or were at least considering a 2-year cycle. I think this is, again, something that can be accomplished administratively. Is that something that you anticipate?
It is something we're working on and something we think makes sense.
Well, I'm glad to hear that, and it certainly makes sense to a lot of us on this committee, and I'd encourage you to do that, Mr. Secretary. Time of the gentleman has now expired. The chair now recognizes the gentleman from Maryland, Mr. Delaney.
Thank you, Mr. Secretary. I want to go back to tax reform for a minute. Obviously, you're working hard, I'm sure, on comprehensive tax reform, which will involve adjusting rates, adjusting deductions, hopefully doing it in a way that's pro-growth, more simple, and doesn't affect negatively the long-term trajectory of the country. Let's assume, for the purposes of my question, that you're ultimately not successful in getting that done, which I know you won't want to acknowledge today, but for purposes of my assumption, let's assume you're not. Would you then consider an approach whereby you pursued international-only tax reform and paired that with the kind of long-promised infrastructure program? Because that approach, which I quite frankly think would in many ways be more beneficial to the U.S. economy than just tax reform by itself without any infrastructure, but that approach has had very significant bipartisan support in the Congress. At least 40 members on each side of the aisle have supported a specific proposal, and I won't ask you on the specific proposal, to do that. But it involves changing the international tax system, eliminating deferral, lowering the rates so that it's more competitive on a go-forward basis, also lowering the rates on all the cash that's over there now and creating a way for that to repatriate back to the country. And as most people know, and I'm sure you do, that approach would generate revenues for the Treasury, for your department, and what we've proposed to do is allocate that to pay for a large-scale infrastructure program. So assuming your comprehensive tax reform is ultimately not successful for any of the 100 reasons people think it may not be successful, and we all hope it is, by the way, because God knows we need to do something on a bipartisan basis, but if it's not, would you consider that approach as kind of your plan B?
I wouldn't. I mean, I think that infrastructure is very important, and I think we're already working on infrastructure, and the idea is to come out with an infrastructure plan shortly. I think, as you know, the President is very focused on $1 trillion of infrastructure spending between the federal government and the states. But my own opinion is putting things together only makes the issues more complicated. But in any event, we look forward to working with you on tax reform and infrastructure.
So how are you thinking about paying for infrastructure in the plan that you're working on?
Again, we've allocated infrastructure spending in the President's budget as it is. I mean, at the end of the day, all these things have to balance. You can move the money around, but we have to look at the cost of it in its entirety.
But if you do it sequentially, which is what you're proposing, and tax reform, let's assume now, switching hypotheticals, let's assume tax reform is completed.
Thank you.
It's successful.
I like that assumption.
Are you envisioning setting aside money to pay for infrastructure spending as part of that tax reform?
Well,
I guess my question is, how do you propose to pay for it if you don't do it as part of tax reform?
Well, again, if we can get the economy to 3% growth, there's an additional $2 trillion of revenues, and that pays for a lot of things. So
right, but we won't know, obviously. Let's assume tax reform were to get done. Are you proposing to wait 5, 6, 7 years to see that 3% growth before you do infrastructure?
No, not at all. And I don't think it'll take 5 years, and I think we should pass infrastructure spending, which will be spent over time.
So when do you envision passing infrastructure spending?
I hope that's something that we consider later this year.
So if your tax reform gets done and then you tee up infrastructure spending and you have a proposal in the Congress at the end of this year, how do you propose in that specific proposal for infrastructure to pay for it, assuming the Congress is not supportive of approving unpaid for spending? How would you propose to do that?
I think it has to be paid for through growth that people buy into.
But growth doesn't work in the models we run here, right?
Yeah, it does.
Pay as you go.
The joint tax uses growth in their assumptions.
Do they use growth for spending programs or just tax reform in the way it's
just
the current
tax
rule?
Reform is
the
used.
current rule in the House is just tax reform. So then, assuming you're operating under the current rules of the House, which is what we operate, how would you pay for it? Because you can't use growth.
Well, at the end of the day, you got to look at all these things in the context of the overall budget. I guess that's the answer.
So if tax reform failed and there was bipartisan support in the Congress to do international tax and infrastructure, you would not support that?
Again, I'm not making hypotheticals. Again, I'm happy to work with Congress and everything else. Again, I'm hopeful we get tax reform and infrastructure both done. They're both incredibly important to the economy.
It just feels like with your approach, you're not going to have any money left for infrastructure. But I yield back.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from Colorado, Mr. Tipton.
Thank you, Mr. Chairman. Thank you, Secretary, for taking time to be able to be here. I represent rural Colorado, and one of the issues that we're really seeing in our state is a tale of two economies, where our metropolitan areas are doing reasonably well, some of our resort areas, but as we move out into the rural areas, we are not seeing the recovery happening. And one of the challenges that we're hearing from our community banks throughout the west slope of Colorado over to Pueblo, Colorado, is the ability to be able to make loans. And one of the concerns that we've had expressed and was actually addressed in the Treasury report when you were looking at the objectives in terms of making sure that the interests of the United States are not undercut by outsourcing our regulatory requirements to the global community. Could you maybe speak a little bit in terms of what you're looking at for the community banks when we were looking at some of the capital regimes for community banks in regards to, say, Basel III, how to be able to address that so our local banks can make those loans?
Yeah, I'm not concerned that community banks are going to be limited by Basel III. I mean, obviously Basel III hasn't passed, and we're generally supportive of reaching resolutions. And a lot of Basel III is about bringing European capital standards closer to ours so that there's a level playing field between international banks and ours. But I'm not overly concerned about the impact of that on community banks. I'm more focused on our own regulatory issues.
Great. And when we're talking about those regulatory issues in our concerns, we just look at some of the outcomes. In rural Colorado, we're a good example of this. The lowest labor participation rate in decades, more small businesses that are shutting down, the new business startups. And we have had testimony that has come in regularly in regards to where banks are not able to make loans that they would like to be able to make.
That's true.
And what do you see as a solution to that?
Again, I firmly believe in proper regulation, but in many cases, particularly for community and regional banks, we have over-regulation, and we're addressing that.
And I think that's going to be important. We had the opportunity to have Chair Yellen in as well, and I'm glad to see the focus coming out of the FSOC for those community banks, simply because we've heard about the trickle-down effect, the best practices, and how that's impacting those local communities and their ability to actually to be able to make those loans and to be able to get the economy moving at the local level. Would you maybe speak a little bit? We've had several questions in regards to BSA, AML, the SARS reports that are going on. Do you see those needing to be tailored as well for our small community banks?
You know, again, I think the BSA AML process should be reviewed, but whatever we ultimately do, I think it should be the same standards on small banks as big banks, because if people are money laundering, whether they're going through a small bank or a big bank, there should be the same standards.
Thank you, sir. And I would like to be able to yield a little bit of my time to my colleague, Mr. Williams, out of Texas.
Thank you.
Thank you, Congressman. And I'll just be brief. I'm a small business owner from Texas. Been in business 45 years, family business for almost 80 years. Tax reform is a big deal to me. We've got to get our tax rates down. And I just want to say this. When I came to Congress, I heard terms I never heard of before. One was revenue neutral. I never heard that in the private sector. Pay-fors, I never heard in the private sector. I think that a lot of people are not believing in Main Street America enough. Main Street America is just ready to have a huge impact on this economy if they can get regulations and burdens off of them. And I would just reinforce a lot of what you've said is that the economic growth that will happen with true tax reform and some of the things we've all been talking about, I think is going to be unbelievable, and that is going to be your pay-for. And I just want to reiterate the fact I appreciate the path that you're on and not be confused with terms that are not ever used in the private sector that nobody ever heard of until they got to Washington. So I thank you for your service, and I appreciate you being here today.
Thank you.
Yield back.
Thank you, Mr. Chairman. Unless you have an additional question, I yield back.
Quickly, Mr. Secretary, in the Treasury report, you indicated that the CFPB is the source of, has an unaccountable structure, unduly broad regulatory powers that have led to predictable regulatory abuses. Are there any changes that you foresee in the Bureau that could happen without congressional approval at this time?
I think that's mostly going to require congressional approval.
Time of the gentleman has just expired. The chair now recognizes the gentleman from Washington, Mr. Heck, for 5 minutes.
Thank you, Mr. Chairman, Mr. Secretary. Thanks for being here. My colleague from North Carolina, Mr. Pittenger, mentioned the Committee on Foreign Investment in the U.S., CFIUS, as we call it. I've also read the Department of Defense report that he alluded to, which discusses how our strategic competitors are seeking to access critical resources and technology. And with the chair's permission, I'd like to enter it into the record, if I may.
Without objection.
As it is common with government reports, Mr. Secretary, the authors evaluate a no-action alternative, or what happens if we do nothing. But they note the cost of doing nothing is extraordinarily high, citing estimates of $300 billion in intellectual property stolen every year and $300 billion in sales to U.S. companies lost as a result of IP theft. economic activity that could have supported approximately 2.1 million jobs every single year. So, Mr. Secretary, here are my questions. Do you think we can afford to do nothing?
No.
Will you and your staff commit to work with Congressman Pittenger and myself and other members of Congress who share an interest in this issue to act on the recommendations of the DoD report?
Yes.
Do you agree with us in our strongly held belief that this issue is pressing?
Yes.
I understand that there have already been some proposals shared between our staffs and yours. If we keep at this through the recess, do you believe that we can have a bill ready that you can support before Congress comes back in September?
That sounds aggressive by congressional time, so I want to be careful not to go out on a limb on that, but we'll be fully available. We're not going away.
It's not a question of Congress being aggressive. It's a question of the Department of Treasury being aggressive.
We're happy to work with you and others. We've given our views on various proposals.
Thank you, sir. Lastly, I would like to associate myself with the remarks of my friend from Colorado, Mr. Perlmutter, with respect to the regulatory framework for access to banking services in states that have legally allowed marijuana consumption. My state is also one of those. And if there's anything that you take away from today's hearing, I hope you will write this down, this name down. Thank you, sir.
Ben.
Travis Mason. Mr. Secretary, Travis Mason was a 23-year-old Marine veteran, served his country honorably. He was a husband and the father of 3 small children, set of twins in there. He was studying to be a law enforcement officer and helping pay his way through that by acting as a security guard at a marijuana retail establishment in Colorado. Criminals entered the establishment, understandably concluding that it was all cash because of our broken regulatory framework. And Travis Mason lost his life that day and left his wife a widow and his 3 children without a father. That's on us. There was no need for that. The regulatory framework has failed. This is first and foremost a public safety issue, and Travis Mason is Exhibit A in that regard. We're not going to turn back the clock, despite what some people may be saying, despite what trial balloons some people are floating with respect to the legalization of marijuana. First medical use, then adult recreational use, also the use of oils for other kinds of medical ailments. It has been an unrelenting march forward from the standpoint of the liberalization of laws. We're not going back. What we need is your help, sir, to make sure that there isn't another Travis Mason. The Cole Memorandum, first from DOJ, and the FinCEN Parallel Memorandum sets forth critical, fundamental principles here, that we proceed if and only if we do not provide access to minors, and that we do not allow cash to get into the hands of gangs and cartels, and then several other conditions, but those first and foremost. That's what we do in states like mine, Washington State, where we have a well-regulated marijuana market. It is the safest thing to do to enable those businesses where now hundreds of millions of dollars in my state alone have been invested in these businesses. We need your help, sir. We ask for your help. Travis Mason. With that, I yield back my time, Mr. Chair.
Gentleman yields back. I wish to thank the Secretary for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask that our witness would please respond as promptly as you are able. This hearing stands adjourned.